markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Just a day ahead of NVIDIA's earnings. Stocks kind of hovering right now around their all-time highs, and the volume for this time of day pretty, I won't say low. NVIDIA has been responsible for over a third of the NASDAQ 100's gains this year. NVIDIA right now most active. 4 of the 11 major industry groups in the S&P 500 are higher. Information technology in the lead, and yes, that is home to NVIDIA. They report again after the close of regular trading tomorrow. S&P 500 right now 7 points higher. That's up 0.1%, 56.23 on the index. The Dow Jones Industrial Average, after yesterday's record close, right now it's down 35 points. The NASDAQ 100, 72 points higher, up 0.4%. And we check the markets view all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Bailey and Alex.
Thank you so much. That was the shortest market check I think you've ever done.
Well, I was just following directions by our producer.
Oh, excellent. Okay, I was like, wow, that really is indicative of nothing happening, but apparently it was deeper than that. Okay, thanks so much, John Tucker. I'm Alex Steele alongside Bailey Lipschultz. Paul Sweeney is off today. So markets are definitely quiet. There are some catalysts. NVIDIA, we still have some data coming out. We get retail numbers from many stores coming out the next few days, and you have the jobs data next Friday. So we want to check in with Ruben Hovhannissian. He's General Portfolio Manager at TCW's Fixed Income Group. Hey, Ruben, what's my position right now headed into the next week and a half?
Well, good morning, and thanks for having me on. Well, our position is that, well, I guess it's probably worth mentioning that we've seen a significant repricing in the rates markets over the last month and a half. So we've basically gone from pricing in only 2 cuts this year and a terminal rate of 3.7% in mid-2026 to pricing in about 4 cuts this year and a terminal rate of about 3% in mid-2026 in the second quarter of 2026. That's a 60-70 basis points repricing in the forward rate curve. And what we find interesting is that when you look at the credit markets and equity markets, there was some weakness in the first week of August in those markets as well, which would be consistent with that repricing. But by now, all of that weakness has been retraced. So if you look at the credit markets, for example, credit spreads, both IG and high yield, have retraced all the widening, and they're back to their mid-July levels or end of July levels. And if you look at equity markets, equities are retesting the all-time highs reached in mid-July. So we look at that and we think there's a little bit of a disconnect, a little bit of inconsistency. Because if you believe that the rates market has repriced because the investment community thinks the economy is weaker now, and it's going to be weaker on a go-forward basis, in fact, so much weaker that would require the Fed to intervene sooner and cut more, then you would think that some of that weakness should also be reflected in equity markets and credit markets, but we don't see that currently. So that, I guess, one reasonable, one explanation for that would be that the market, or one takeaway from that is that the market has gone from pricing in no landing to pricing in some sort of a perfect soft landing. In other words, this notion that the Fed has a lot of room to cut, the Fed will be able to navigate this late cycle perfectly and calibrate the rate just right to the right level to forestall the slowing economy and not and at the same time not cause reacceleration of inflation. Excuse me.
And Ruben,
obviously yes.
Were we surprised at all when we hear Jay Powell say the time has come? I mean, it seemed like maybe with the expectations around Jackson Hole would be kind of giving the all clear, but maybe not necessarily signaling that we're going to have, at least as the rate market is implying, 5 or 6 straight cuts?
We at TCW were not surprised because we have been of the opinion for a long time that the economy has been slowing, although the headline numbers sometimes may not lead you to that conclusion. But when you peel off a few layers and you look under the hood, you would see slowing, labor market, for example, based on the forward-looking indicators, starting from for a year now, I guess. We have been seeing slowing of consumption for 6 months now. We've been seeing the slowing of the credit creation in the economy, and all of those were indicative of slowing economy for some time. Yet, I think I tend to agree with you that declaring a victory over inflation and telling that the time has come to shift to the second mandate of the Fed at the time when core CPI is at 3.2% and core PCE is at 2.6% indicates that they get it. They do understand that the downside risks are now real, and they have to shift and they have to act to try to arrest the declining economic growth.
All right, Ruben, we're going to leave it there. Thank you so much, Ruben Hovnessian, a General Portfolio Manager with TCW's Fixed Income Group. And just to point out, we get the 2-year auction today coming at $68 billion. Then we get a 5-year for $78 billion, 7-year and $44 billion. So lots of ways to kind of wager on the Fed and supply over the next couple days as well. Okay, let's get to some of the market moves here. Supermicro Computer shares just tumbling like crazy today. This is after Hindenburg Research said it's short the maker of server equipment. We want to get more on this with Woo Jin Ho, Bloomberg Intelligence, a senior technology analyst. Did you read, like, what did you make of the report? It said it was glaring accounting red flags, evidence of undisclosed related party transactions, sanctions, and export control failures and customer issues. Yikes.
Yes. There was a lot in there. I'm actually glad they cited our report. From
Hey,
the
I didn't know that one. Okay.
Look, a lot of the stuff that we've, what I've read, they're known issues, right? They've been in the 10K and the 10Q filings as part of the risk and disclosures. They cited the delisting back in 2019. They also cited related party issues as well, and these are all known. I almost get a sense that they're trying to kick a dog while the dog is down. A short report because they had gross margin issues because of some aggressive pricing and supply chain issues. So, you know, I do question the timing of this report.
Yeah, just keeping in mind, Supermicro from July 12th down more than 40%. But my question automatically goes to, there's a difference between known issues and issues that people actually factor into their valuation or their expectations. Like, does Hindenburg releasing this report, in your view, make analysts maybe revisit the bear case?
And that's a great question, Bailey. And I do think so, right? Because there were some, I guess, questions in terms of who they were selling to, in terms of sanction-related parties, Russia in particular. And that's going to raise yellow flags or red flags to the U.S. government, right? And if that's going to draw greater scrutiny, you never know what might be behind that closet.
So you said that they cited your research. What else did you guys pick out from like the 10K and stuff in terms of the risks for Supermicro?
Yeah, look, one of the things that I picked out was the related parties, right? Two of their suppliers, the CEOs of two of the suppliers are the CEO, brothers of the Supermicro CEO, right?
Oh.
And that's something that I'm not thrilled about. Quite frankly, you would like a little bit of diversity in terms of the supply chain versus some of a nepotistic relationship. And, you know, that's the big glaring one, but also they've had accounting issues in the past which prompted the delisting. The hope is that with the CFO that they have currently, they've cleaned all of that mess up.
Well, because it feels like in Supermicro, obviously everyone knows NVIDIA, but this is a stock that from over 3 years is up 1,500%, went from, you know, 1.6 billion to a peak at 58 billion. Like, when these companies go from small cap to large cap, it feels like, and correct me if I'm wrong, it feels like investors sometimes gloss over diving into disclosures and just kind of take them as a component of the S&P 500 and let that be their investment thesis.
Well, let me take that a step further. When you go for a management team from a small cap management team to an S&P 500 listed company, you know, you're still in your preteen years, and all of a sudden you have to act like a grown-up. Right?
Wow, that's a brilliant analogy.
Right? So when you have to act like a grown-up, the management team have to act like a grown-up, the IR has to act a little bit more professionally, I would sense. And then, look, you have a broader range of investors that are looking at the company right now. I'm not saying that they didn't do the work, right? But there probably was some momentum in there.
Because I do want to call out, so Supermicro, 9 buys, 9 holds, 1 sell. That's 19 analysts with the biggest shops on the street covering it. You look back in 2021, 5 buys. It was Northland, Loop Capital, Susquehanna, CJS, and Vertical Group. So to your point, your management growing up, and also I imagine the street following, has to get caught up to speed on a stock very quickly.
Yes, right.
And does that enable some of these things to maybe be glossed over?
And I will tell you, if I saw some of the research reports from this past earnings season after they had that gross margin, let's just say hiccup, theoretically, right? The commentary behind that was a lot more critical than somebody who may have been, let's just say, an avid supporter of Supermicro over, prior to the big AI boom.
I think the preteen adult thing is like a perfect analogy, and I think that just sums it all up. Unfair question, because I know you can't actually answer it, but how much more downside do you think that there is based on the fundamentals? Like, where's a good way to think about it?
So I'll answer it in this way.
Yes, please.
If I look at the valuation of the stock right now, right, we're talking about 0.3 times forward sales. Given the AI momentum, typically I like 1 times forward sales, but historically they've traded at 0.75 forward sales. So they're playing, they're valued at a discount to the historic valuation.
Okay, that's a great answer to that question. I love that. All right, Wooj, thanks a lot. Also good to see you in studio. I think it's been a minute. All right, Woo Jin Ho joining us from Bloomberg Intelligence. He is senior technology analyst over there, talking about that Hindenburg research report that quoted Woo Jin Ho's research in Bloomberg Intelligence. Let's not forget that. So get your information there first. All right, coming up, we're going to talk to Rania Sedholm, managing partner at Sedholm Law Group, on the struggle of luxury brands and how those price cuts are now spreading beyond that luxury world. For now, let's go to Michael Barr for World and National News.
Thank you very much, Alex and Bailey and John. The Israeli military says it has rescued one of its hostages abducted in Hamas's October 7th attack. The military said today that 52-year-old Cade Farhan El-Kadi was rescued in the southern Gaza Strip. IDF spokesman Daniel Hagari.
We cannot go into many details of this special operation, but I can share that Israeli commandos rescued Cade Farhan El-Kadi from an underground tunnel following accurate intelligence.
The IDF's Daniel Hagari. President Biden's path to citizenship order has been put on hold. We get more from Bloomberg's Ed Baxter.
A federal judge in Texas has ordered a temporary pause on the Biden administration's new protections, allowing immigrant spouses of U.S. citizens a path to citizenship. 16 states, led by Republican attorneys general, challenged the new plan. They argue the process will encourage further mass migration into the country. One of the states leading the challenge is Texas, arguing that the state has had to pay tens of millions of dollars annually for health care and law enforcement. The order puts the program on hold for at least 2 weeks while the challenge continues. Ed Baxter, Bloomberg Radio.
Former President Trump made a campaign stop in Roseville, Michigan after a speech at the National Guard Association convention in Detroit. Trump is projecting confidence that he will win Michigan in November.
There's more enthusiasm now than there was then. Wouldn't you say so? Wouldn't you say? Because,
Meanwhile, Vice President Kamala Harris's husband is calling his wife a pro-growth capitalist who wants a forward-looking economy. Second gentleman Doug Emhoff talked about Harris's economic vision at a Sag Harbor fundraiser last night. Global news 24 hours a day and whenever you want it. Bloomberg News Now. I'm Michael Barr, and this is Bloomberg.
that shows me what I spend instantly.
We're Monzo. Give us a go. See?
I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Major stock averages right now, little change to lower. Trading volumes well below the 30-day average for this time of day. And just a day ahead of NVIDIA's earnings, investors getting ready to see whether they're at least going to match Wall Street's pretty lofty estimates. NVIDIA, one of the most actively traded stocks right now, it is up about 0.8%. S&P 500, 4 points lower, 5612. So that's just under its all-time high. And Dow Jones Industrial Average, after setting a record close yesterday, 99 points lower right now, down 0.25%. The NASDAQ 100, that is higher by 1 point. As far as yields go, two-year yield pretty much unchanged. That's at 392. The 10-year Treasury yield right now up 2 basis points. That is at 384. And the VIX, Wall Street's fear gauge, at 1604. That's just down slightly. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Bailey and Alex.
All right, John Tucker, thank you very much. Alex Steele here alongside Bailey Lipschultz. Paul Sweeney is off today. This is Bloomberg Intelligence Radio. We are broadcasting to you live from Interactive Broker Studio right here in Midtown Manhattan. So Paul's not here, so we can talk about shopping. I love shopping. I love shopping on sales. I will only shop on sales. I will only pay full price for face care, Birkenstocks, and Bionics because I have to.
Birkenstocks.
I have bad feet.
Oh, well,
so I don't have a choice.
Yeah, that's
like
not really discretionary spending at that point.
It's not. I can wear heels or Birkenstocks or Bionics. That's it. John Tucker's
these
things to say.
personal details you don't really have to tell everybody about.
Do I?
But I'm glad you did.
No, come on. I love it. Didn't you talk about the whole fan and ice thing, or was that in commercial break?
I think there was a commercial break.
Excellent. Okay. That's a different story of how to cool your home without an air conditioner. Anyway, wanted to get an expert on this because I'm personally interested in what the sales are going to be like for the summer, which just begs the question how much our luxury and other goods and other stores have to cut prices to get consumers in the store when they really are trying to slice and dice where their spending is. So Rania Sedholm is managing partner at Sedholm Law Group. She joins us now. The Law Group provides the ability to immediately access counsel to provide practical solutions on critical issues for all kinds of companies, particularly though most of their clients tend to be in fashion, fashion, luxury goods, technology, and food and beverage. It's good to have you in the studio. Thank you so much for joining us.
Thank you.
So what's the common question you're getting right now?
Everyone is asking, when is the economy going to improve and how can I mitigate any risks, because people are afraid they're going to have to file for bankruptcy.
Wow. Okay, so it's that bad for some of these guys that bankruptcy is on?
It is. I mean, retail is hurting. If you just walk down the street, most people are walking around without bags. There's a lot of window shopping, or whatever it's called when you enter and don't buy, other kinds of shopping, but buying is on hold, and I think consumers are being pickier because they don't have as much disposable income.
And we've been tracking and talking to economists about the K-shaped recovery post-pandemic, so people who are affluent can still buy whatever they want, and others are having to seek deals. How does that impact potential clients or companies that could be going bankrupt? Is that kind of skewing more towards the middle of the road? Those are the companies that are worse off?
I think so, yes. You know, it's very dangerous in the middle. Those who are catering to the 1% or the 0.1% generally are fine, like Hermes and Chanel and those brands. And those who are catering to people with no disposable income that sell food or things like that are generally okay because you have to eat. But when you're going into the mid-market and trying to get Henry's or, you know, middle class, whether it's middle class or upper middle class, it's very, very difficult.
So what's the strategy before we get to bankruptcy here? Because that's where the price cuts come into play, right? Can they cut enough to get enough consumers in the stores to buy enough to make up for the revenue loss from the margin cut?
Well, it's been working for Target. You know, Target cut about 1,500 of their goods by substantial amounts, you know, over 20%. And I think they just reported earlier this week, or maybe last week. Last week, yeah, because it's only...
It blends.
Yeah, it's only Tuesday, yes. That they're up, finally. And they have a better forecast for the remainder of the year. So it does seem to be working for them. Whether it's working for luxury brands, it's too soon to say, but, you know, Burberry and YSL, for example, Saint Laurent, they've cut their prices, I would say, by at least 10% on many products. And I don't know yet whether it's going to help them.
Just going to ask the dumb question as someone who does not buy a lot of nice goods. Does 10% really move the kind of people who would be buying a $400 belt off the sidelines to buy one?
It certainly can, because the 10% also reduces your tax in New York, right? So we're spending, what, 8 or 9%? So 10% reduction is more than a 10% reduction in a way. So yes, it can move the needle.
It wouldn't move my needle.
Well, then I guess I'm just thinking from my perspective.
But I'm not their customer, to begin with. But you know, I like sales like, you know, 50%. Like 10% ain't gonna cut it.
That's why I ask, because like Macy's had underwhelming results. If I go to Macy's, I immediately go to the sales section, and if it's 20%, to me, I'm like skeptical. So I think they aren't actually giving me a deal. But if you give me 50 or 75% off, like the last shirt in my size, then I'm gonna buy it.
Yes, well, this is the issue, right? These are the questions we're constantly discussing. At what point do the consumers think you're going to keep reducing your prices and wait and not purchase? You know, it's not holiday season yet. When holiday season comes around, people will be buying. What it is they're going to be buying, we're going to find out. But you do have to ask yourself, how many cuts do you need? Is it better to keep cutting a little bit at a time? You know, sort of like the Fed with interest rates, a quarter point at a time. It's a teaser, or is it better to just cut the price? But these price cuts that we're discussing today, they're permanent. They're not on sale. These are the new prices that you will be paying. So when you walk into these stores, when it's on sale, it should be even lower.
Well, that's interesting. To Bailey's point earlier, does any of this, do you expect M&A? And where?
Yeah, that's a great question. I think that if you're in a niche market, your product is niche or your messaging is niche, you'll likely get picked up in M&A. But otherwise, no, I think it's more, you know, cannibalization and, you know, Darwinism.
But with the niche guys, aren't the niche guys doing okay? Because for the fact that they're niche, or it just still depends?
No, it depends, because the niche brands typically don't sell high volume. And so their cost of goods is high. And they can't manipulate their pricing as much as larger corporations can.
Well, you mentioned Target cutting prices and that bringing in consumers through the door. We spoke with Brooke Sutherland about a story on commercial real estate and pointing out that fast food chains are being able to kind of weather different trends from a return to office, whereas maybe a mom and pop shop can't handle that as well. With Target cutting prices and drawing in consumers, and seemingly more people going to stores like Walmart or a Costco or a Sam's Club, how does that impact some of these other either small businesses or even just less global retailers?
I think it's tough out there, and I think it's going to get tougher. And unfortunately, where we stand right now, the economy is so uncertain because we don't know who the next president will be. And once we do know that, people can start planning. This is probably the worst time, typically, in any election year because there's so much uncertainty. And this election in particular, we have two candidates who are on complete opposite sides of the economic spectrum. And so we are in a wait and see holding pattern, and that makes everything a lot more difficult.
You mentioned Target. What other companies do you think have been doing the price cutting and managing this environment well?
Certainly IKEA. I mean, they not only cut their prices, you can go online and you can see the price before and the price now. So they're really speaking to consumers and showing them, you know, you no longer have to pay, I'll make these numbers up, $300 for this lamp. You can pay, you know, $225, and this is our permanent new price. So I think they're doing a great job in showing the consumers exactly what it is they're doing to help them and drive their own sales, of course.
About 10 seconds. If we're shopping, should we be going to the stores now or waiting for some of those holiday sales?
That's such a tough question. I mean, I try not to buy things at full price if I can help it. So I, you know, confession, usually wait for sales. But if you need something, try to go to those stores that have already reduced their prices.
Yeah, she sees me. She sees me. She gets me. All right, thanks. I really appreciate Rania Sedholm, managing partner at Sedholm Law Group, joining us there. Are you done, Bailey, with your home furnishing? I mean, it's been a year.
It's never ending. Well, because we got married, so we had to plan the wedding, then we're still, as JT knows, trying to address a leaky roof, fireplace, so the living room still is...
Yeah, he's not helping. He already said that. All right, more coming up on Bloomberg Intelligence. This is Bloomberg.
company news headlines on Bloomberg Radio.
And I'm John Tucker, and the news will look at some of the company stories we're following. Let's start off with Walmart, bringing pre-owned watches and collectible trading cards to its online marketplace. A retailer looking to further beef up its e-commerce business. They're trying to grab more spending from their rivals like eBay and Amazon. The company expanding the assortment on its marketplace, which offers merchandise from third-party vendors. They're trying to meet customer demand. The new categories include high-end beauty products, collectibles, and other pre-owned products. The marketplace fueling growth of Walmart's e-commerce business. The online sales actually grew 22% in the U.S. in the last quarter. The number of weekly active customers also rising. Travis and Jason Kelsey, brothers and NFL stars, signing a 3-year deal with Amazon.com's Wondery for their podcast, New Heights. The arrangement goes into effect this month. Allows Wondery to sell ads on the show's video and audio feeds and distribute it globally. It includes the program's back catalog. The deal worth over $100 million. And free versions of the show are going to be made available on Wondery Plus. That's Amazon's subscription service. The deal gives Amazon the rights to develop, manufacture, license, and distribute all merchandise based on the program. Listenership actually took off after Travis began dating Taylor Swift. But you knew that.
I was going to say. I'm sure it's good, but let's just not forget that little piece of info.
Finally, it's not company news, but after 15 years of brotherly war, a reunion tour for Oasis.
Today is gonna be the day that they're gonna throw it back to you.
So Liam and Noel Gallagher's 1990s Britpop band is going to play dates in Britain and Ireland in 2025, unless they kill each other. And that's...
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, happy Tuesday, everybody. Alex Steele here alongside Bailey Lipschultz. Paul Sweeney is part of the rowdy crowd, apparently, over at the U.S. Open today. This is Bloomberg Intelligence Radio. We bring you all the top news in business, economics, and finance through our lens of our Bloomberg Intelligence folks. They cover 2,000 companies and 130 industries all around the world. We are broadcasting to you live from our Interactive Broker studio right here in Midtown Manhattan. Also, check us out on YouTube. So Bailey Lipschultz, in his real job as senior equities reporter, he crushes the IPO market. This is his jam. You don't do it anymore?
No, I know.
Okay.
I like to think, this is kind of a job.
Yeah, I hope this is a job. What are you working on right now in terms of IPOs? How's it looking?
Yeah, we have a story that went out this morning basically saying if you want to go public, your two options are try to thread the needle in the next 6 weeks to go post-Labor Day, pre-election really shut down, or just go ahead and punt and wait until next year, which at least when I talk to tech advisors and some of the bigger names that we've been waiting for, wait for March to May when their interest rate cuts and a U.S. election will be in the rearview mirror. But that's not to say there won't be deals in the next few weeks.
So how does that work? So I know that for oil M&A, for example, I was talking to people about this months and months ago, is that some think it's better to just get on the docket, get in line, and others want to wait until they get clarity on the presidential election. Is there a docket you have to get in line for an IPO? Is there some logic on the IPO sense for that?
Well, there's a lot. So if you talk to bankers whose job is to be optimistic, and they will openly say that, you should go now. Markets are near all-time highs. We have a rate cut likely to happen in just a few weeks. The election is going to have some headline risk, but at the end of the day, if you execute, you're fine. On the flip side, there's, to your point, getting in line. You could go if you're getting ready, but there is, at least in one camp's kind of argument, risk of being one of many if you go in March, April, or May, where maybe if some of these more high-profile names are on the road, you're not going to be able to get T. Rowe or a bigger investor to want to sit down and really dive through your slide deck. Instead, they're going to be paying attention to some of those names.
No, fair enough. I mean, that makes sense. What kind of companies do you think are going to be getting in line?
So right now, our read is really that this fall window is going to be the others. So not those cool Stripes or Klarnas or Databricks, these technology giants that could go whenever they want. Some technology names, so automotive data firm, Solera is one that we've been keeping an eye on. They're backed by Vista Equity Partners. Semiconductor name, Cerebras. But really, you're looking at the likes of Aeromexico or HMH, which is kind of in the insurance space. So there are a number of other players that are in areas that are kind of attractive to the right investor, but maybe not the very exciting fund names.
Why go public now at all?
That is the million-dollar question. I ask people that all the time because if you look at a company like Stripe or you look at a company like Canva, you're private. You don't have to worry about your stock price. You don't have to worry about meeting with investors or providing regulatory updates on a kind of catered basis. And you're able to provide liquidity to your insiders and to your early investors that want to get out. But the big thing is if you're going to go public, the kind of line of sight that you have down the road is if you want to raise cash through the traditional debt markets, that's easier. You get public. You don't have to worry about selling equity into the market, but you can kind of have a public presence and be able to better sell and service traditional debt.
Yeah, because I was wondering then if rates come down, that gives yet another easier avenue for some companies too.
Yeah, exactly. I mean, that's been something we've been keeping an eye on, and we've been talking about expectations for rate cuts for what seems like a year at this point. But if and when that happens, how that kind of changes the calculus. But really, if you're in the banking or ECM world, the argument is that when rates come down, people are going to be looking for riskier assets, step out more on the risk spectrum, and then inherently that means more IPOs and more fund deals.
Bailey, thanks a lot. I really appreciate it. Thanks for doing your pretend job with me here for 2 hours. Now you can go to your real job.
Of course, I get to go back to the desk. Well, enjoy the U.S. Open though tomorrow.
Thursday.
Thursday. Oh, you're off tomorrow, but then U.S. Open Thursday.
Yeah, I'm going to go at night. I haven't been in like 20 years.
Heck yeah.
I'm very excited. All right, that wraps it up for Bloomberg Intelligence. I'm Alex Steele. Paul Sweeney will be back tomorrow. Coming up, Balance of Power with Kaylee Lyons. This is Bloomberg.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
Kamala Harris goes on offense on inflation in a new ad. Welcome to Balance of Power. I'm Kaylee Lyons in for Joe Matthew today on this Tuesday edition. And it's on this Tuesday that this new spot will start airing in battleground states, specifically focusing on Harris's economic policy. We'll have more on how that policy is playing with voters with Cliff Young of Ipsos Polling and our political panel this hour. Plus, of course, we'll take a closer look at the policies of both Harris and Trump and specifically what they might mean for crypto. Nathan Dean of Bloomberg Intelligence will be with us for that. But first, though, as always, we start with a check on the markets. And Amy Morris has a look from our 99.1 newsroom here in Washington. Hey, Amy.
All right, thank you, Kaylee. U.S. consumer confidence rose for a second month in August on more upbeat views of the economy and inflation. The Conference Board's gauge of sentiment increased to 103.3 from an upwardly revised 100.9 a month earlier. We get more with Stephanie Gouchard, senior economist at Global Indicators of the Conference Board.
It's an improvement, but I wouldn't qualify it as a strong improvement. So what has been driving the improvement is some more positive views by consumers about business conditions right now and business conditions in the future.
The Conference Board's Stephanie Gouchard. A measure of expectations for the next 6 months rose to 82.5 in August from 81.1. Present conditions increased to 134.4. That's a rise from 133.1. Super microcomputer shares are now down more than 2% after Hindenburg Research said it's short the maker of server equipment. The stock fell as much as 8.7% after Hindenburg Research wrote an investigation into the company revealed glaring accounting red flags, evidence of undisclosed related party transactions, sanctions and export control failures, and customer issues. Supermicro did not immediately respond to a request for comment. And we check markets for you all day long here at Bloomberg. The S&P 500 is little changed on the upside, NASDAQ little changed on the downside, and the Dow is down 0.1%. Light volume today. 10-year Treasury yield at 3.84% and the 2-year yield at 3.93%. That is a Bloomberg Business Flash. Now back to Balance of Power with Kaylee Lyons.
All right, Amy Morris with a look at the markets on this Tuesday. Thank you so much. And given it is Tuesday, that means we are now exactly 10 weeks out until Election Day. 70 days for those of you who are counting. And we can bet the candidates will be spending a significant chunk of these next 70 days on the campaign trail, specifically in the key battleground states that ultimately will decide the outcome of this election. We're already seeing that this week with Trump and Vance in Michigan. They'll head to Pennsylvania later on this week as well, while Kamala Harris and Tim Walz are getting set to depart on a bus tour of Georgia that begins tomorrow. So let's get into all of this now with one of our reporters on the campaign trail, who is actually here in Washington this week, or at least for these few days. Stephanie Lai covers politics for us at Bloomberg and is joining me in studio. So, Stephanie, I know it's only a matter of time before you're back out on the trail with these candidates, but it does feel like the pace is picking up. And we understand this is by design, at least on the Trump-Vance campaign team. Given all of the oxygen and energy present in the Harris campaign, they are starting to plan to spend more of their time on the road.
You're certainly right. And if we remember, just 2 weeks ago, Trump had only spent maybe 2 days on the road. And so the pace that they're going is significantly more intense than they were just, earlier this month, when it seemed like they were competing against Joe Biden for the presidency. And as you mentioned, of course, part of this is because of all the oxygen that Kamala Harris and her campaign is taking up. But also, it's just, it's 10 weeks out until the election. We know that the Harris-Walz ticket is going to be barnstorming day after day. And so it's just, it's the name of the game, really, at this point.
Yeah, it doesn't wait till after Labor Day, it seems, in this cycle. It's getting going in this week before Labor Day. There's also the question, though, of the resources to be able to keep this up over the next 10 weeks. As we've talked a lot about the fundraising machine the Harris campaign has been to this point, over $500 million raised. How are we likely to see Trump and Vance events changing with financial considerations in mind, perhaps not as many big rallies?
We've actually seen that play out, at least in these last couple of weeks when he has been picking up more of his campaign schedule. There's a handful of events every week that tend to be a smaller audience, maybe, at a sheriff's department or in just a smaller arena, really, where he can still gather supporters, but it doesn't necessarily associate with the cost of buying out an entire arena, filling out an entire, stadium with supporters. But this allows him to have a more personalized experience with some of his voters in these key swing states.
Well, and it also becomes a question of the message he's bringing and the ticket is bringing as a whole to these states. We have seen Donald Trump openly questioning the advice of his own team when it comes to focusing on policy and not personal attacks against Harris or others. While J.D. Vance does seem like he is talking more about policy. He's supposed to talk about economic policy, specifically in Michigan. Today, he was talking about abortion in a Meet the Press interview over this past weekend. Are we seeing, for all of the talk about J.D. Vance possibly being able to serve as the attack dog for Donald Trump with his selection as his running mate, that actually it's Trump who's still the attack dog and J.D. Vance is the one who's actually articulating policy?
And I think that's a really great point. And part of that is because some of the appeal of Donald Trump is his personality, right? It's the personalized attacks that he makes on his opponents. And that's something that his supporters really admire and like of him because he doesn't come off as a politician. So the fact that he's able to still do that while his running mate takes on some of more of that policy discussion does seem to be playing out, exactly how you mentioned it.
Well, speaking of how things are playing out, we, of course, saw a very energetic convention in Chicago last week for the Democrats, culminating in that acceptance speech from Kamala Harris. Haven't seen much of her since then. She's not getting back out on the trail in physical form, at least, until tomorrow, and we still don't know if she's sitting down for that big interview she said she wanted to schedule before the month of August is out. There's only 4 days left in August. 4 days. Stephanie, when are we going to start seeing more from her?
I mean, so part of that is that they said they would have it scheduled by the end of the month. So that might not necessarily mean that she does the sit-down interview before then. But I think that you're right in that she hasn't been as out there. She hasn't been as accessible to the press as Donald Trump has been. And that's exactly what their campaign is focusing on, the fact that she's, quote unquote, hiding behind, her advisors and not necessarily getting her message out there. And there's still a lot of questions about what policies she's standing behind, how to actually see them through. And so that's really what we're looking for, as we get into these last 10 weeks of this election cycle. But, time will tell. But it does seem like they are picking up their campaign schedule quite a bit.
So beginning with the bus tour in Georgia tomorrow, and then assuming they might have a pace similar to the Trump-Vance ticket, beyond that after Labor Day?
It certainly looks like that would be the case. I mean, especially with the fact that there is only 70 or so days left. That really is the only way to get your name out there to voters.
Well, and of course, it's not just about getting your name out there. It's about getting people to give you money as well. We talked about the kind of money that Harris has been bringing in, but J.D. Vance is starting to pull some money in too, given his ties to Silicon Valley. We understand some big name donors are organizing events for him, both in New York and California in the coming weeks.
Yeah, so one of the main reasons why J.D. Vance was picked as the running mate was just because of the ties that he has to really wealthy donors and the appeal that he has with these folks. And so in the next 2 or 3 weeks, he has a couple fundraisers lined up, one of which in Los Angeles, California with David Sachs, and another in New York with Jacob Hellberg, who, runs Palantir or is a co-founder. And so, just these names really signal that there is a shift among, big tech, big Wall Street money coming in to support Trump. And that's something that their campaign has been really highlighting in the last couple of weeks.
All right, and of course, over the last couple of weeks and this entire cycle thus far, Stephanie Lai has been covering the campaigns for us. Great to see you here in Washington. Thank you so much for joining me. Now, as we continue to talk about the messaging coming out of these campaigns and the way in which they are spending the money that they're raising, we know that Kamala Harris has a big ad buy that's going to be running through Labor Day, and of course, even more ad buys coming after Labor Day. One launching today, though, in some of these key swing states, is specifically about the economy. It's titled Every Day, and it cites some of the things she said in her speech in North Carolina earlier this month when she outlined policy proposals when it comes to affordable housing or price gouging, for example. Here's a little taste.
I will be laser focused on creating opportunities for the middle class that advance their economic security, stability, and dignity. If you want to know who someone cares about, look who they fight for. Donald Trump fights for billionaires and large corporations. I will fight to give money back to working and middle-class Americans.
But how is that kind of messaging resonating with voters, especially when she's part of this Biden administration and the economy under Biden is something that a lot of voters don't feel thrilled about? So to get into this conversation now, joining me in studio is Cliff Young. He is U.S. Public Affairs President at Ipsos Polling and, of course, has been looking into the economy issue and other issues throughout this entire cycle. So you put out a piece last week, Cliff, and it's good to see you.
It's great to see you.
Here in studio about Biden's inflation orphans. Does Kamala Harris easily adopt those inflation orphans? Are we seeing signs that she's having some success more so with the economy question than Biden was?
Yeah, well, first and foremost, the primary issue is inflation in the economy. Inflation. And that was Biden's primary problem. He was weak in the polls. His numbers were weak because of that. And what we can say is we still don't know. I think we need to wait a bit to see how Harris does. But part of her jump in the polls is a function of these very constituencies being more enthusiastic towards her in respect to the inflation. So some effect in the short term right now, whether there's a long-term effect, we don't know. What we can say definitively is that Harris and the campaign are on message.
Well, and some of the things that they're saying are still rather vague policy ideas, but specific enough that you have folks here on Bloomberg, for example, questioning whether or not these are things that actually work in reality, like when it comes to price gouging or no tax on tips, which is something Donald Trump is floating as well, that many who are deficit wary say that could actually create a bigger fiscal issue. But how does it actually resonate with voters who may not be prioritizing those considerations, thinking more about their own kitchen table?
These are populist measures. These are measures designed to win the election. What she's doing, what Harris is doing, the campaign is doing, is showing the American populace, showing these orphans that they're empathetic towards them, that they're worried about those issues. And as I said before, part of, or in part, the jump in the numbers are a function of her reaching these constituencies.
Well, speaking of a jump in the numbers, we got consumer confidence data today, obviously something we watch very closely here at Bloomberg. 6-month high in August, in part because of more optimism around inflation and this idea that interest rates could be coming lower as well. Is there a historical relationship between where consumer confidence is and the way in which effective incumbents, as Harris is part of this administration, perform in election cycles?
Yeah, there's a correlation. It's difficult to kind of line it up as a one-to-one relationship. But the more people feel optimistic, the more likely they are to support the party in power. The more pessimistic they are, the more likely they are, to not support the party in power, to support the opposition. And this is good for the Harris campaign. Now, is it too little, too late? We will see. But at least directionally speaking, it's good for the Harris side, not as much for the Trump side.
Well, on this idea of incumbency, there was an op-ed published in the Washington Post by Mark Thiessen today that talked about how in 188 years, we've only seen one current sitting vice president actually win the presidency. It was George H.W. Bush. And in this op-ed, he says Bush succeeded where other modern vice presidents failed for one simple reason. Americans wanted a third Reagan term. Today, no one wants another Biden term, pointing out that Ronald Reagan left office with 63% approval and Biden has 57% disapproval. The suggestion here is if voters wanted another Biden term, he would still be the Democratic nominee. How do you think about that, Cliff? Is there a point there?
Yeah, there is a point. I think it's a great point. And indeed, we have to juxtapose, will vibes win out? Will that enthusiasm, mobilizing the base, the energy in the base, will that propel Harris forward? That's a question mark, because right now the fundamentals, per this article, the fundamentals are in Trump's favor. Basically historically low or almost historically low approval ratings, the primary issue being inflation, but Trump being stronger than Harris on inflation. And so therefore we need to wait and see a bit. I think the numbers are a bit overstated for Harris at this point. I think there'll be a burn-off. I think that we have to wait a couple weeks, probably after Labor Day, let's say into the end of that week. But yes, it really is the vibes versus the fundamentals. We would expect the fundamentals to win out, but we don't know.
All right, fair enough. Well, I want to talk more about Donald Trump because he actually sat down for an interview with Dr. Phil in recent days. It's starting to trickle out today. And he specifically talked about bases of voters that may or may not turn out for him. Take a listen.
Christians, for whatever reason, don't vote very much, proportionately. NRA people and people that feel very strongly about the Second Amendment, they're not voters. I don't know why. Maybe it's a rebellious streak. And I said to the Christians, we got to win this election. If we win this election, I'll straighten everything out in less than 4 years by a lot.
But as we think about some of these groups, Cliff, and the way in which we've seen a messaging policy evolution from Donald Trump when it comes to, say, abortion, just in the last few days, suggesting he'd be great for reproductive rights. J.D. Vance saying Donald Trump has committed to him that he would veto a federal abortion ban. Does he risk alienating parts of his base, like evangelical Christians, with that kind of turn on that policy specifically?
He's really worried about turnout. He's really worried about his base turning up, but he also is worried about the middle. And what he's doing right now is tacking to the middle. He's trying to be more moderate in tone. Whether that works, that's the million-dollar question. But ultimately, it's all going to be about turnout.
Well, so on this abortion issue specifically, we have seen it be a driving turnout force for Democrats in special elections and others, certainly in the midterms in 2022. Can he arrest that with this kind of policy shift that he's seeming to try and articulate, leave it to the states, I'm not for a federal ban? Can he kind of stop that propellant force of women specifically being driven to the polls over that?
Yeah, he wants to eat his cake and have his cake and eat it too, excuse me. He wants to be on both sides of the fence. Obviously, he's worried about those moderate women in suburbia that tend to be Republican. They are abortion orphans, let's say, if the theme is orphans ultimately. But I would say the following. I would say the primary issue still is inflation. Obviously, abortion mobilizes especially the Democratic base and should be a worry in an election of game of inches for Trump, but it's still about inflation. We haven't heard much from Trump talking about the economy and inflation today.
Well, we know that he wins on inflation. He also wins on the border consistently. We just have a minute left here, Cliff. Other than abortion, what is Kamala Harris winning on? What issues do voters trust her with?
Healthcare is one, but obviously it's less important today than it was a number of years ago. The primary Democratic issue today, which is the second issue in people's minds, in Americans' minds, are threats to democracy. She far outpaces Trump on that critical issue. That's been a Biden theme, primarily a Biden theme. Obviously, Harris is using it as well.
Yeah, and we heard some of that in her acceptance speech last week when she talked about Donald Trump as an unserious man, but described the consequences of him winning this election as quite serious. Cliff Young of Ipsos, always great to have you here in studio. Thank you so much for joining me. And we still have much more ahead. We have to dig more into the potential policies of both Trump and Harris and how markets should really be looking at this as we have 70 days to go until the election. Nathan Dean, the senior U.S. policy analyst at Bloomberg Intelligence, will join me next here on Bloomberg.
It's 12:21 on Wall Street. I'm Amy Morris. Consumer confidence rose for a second month in August on more upbeat views of the economy and inflation. The Conference Board's gauge of sentiment increased to 103.3 from an upwardly revised 101.9 a month before. The median estimate in a Bloomberg survey of economists called for a reading of 100.7. Eli Lilly now selling vials of its blockbuster weight loss drug Zepbound to patients for as little as $3.99 a month. as it works to overcome supply shortages. Patients with a prescription for Zepbound can purchase a month's supply of single-use vials through Lilly's direct-to-consumer site starting today. The vials are priced at about half of what the shots would cost. Zepbound is usually sold in an auto-injector pen. Shares of Eli Lilly are 0.8% higher. We check markets for you all day long here at Bloomberg. The S&P 500 is little changed on the upside, up about 3 points. NASDAQ up about 5 points, and the Dow is down 62 points. The 10-year Treasury yield at 3.84% and the 2-year yield at 3.92%. And since Kaylee mentioned it, Bitcoin is down 2.3%, now at 61,933. And that is a Bloomberg Business Flash. And now back to Balance of Power with Kaylee Lines.
All right, Amy Morris, thank you so much. I am indeed Kaylee Lines in Washington. Welcome back to the Tuesday edition of Balance of Power, where we not only balance power, we also balance how politics and the markets intersect. And on that note, one of the top stories on the Bloomberg terminal today has a headline that reads as follows. Harris's rise in polls has investors rethinking Trump trade bets. Essentially, the idea here is that Wall Street is adjusting its bets around the election of Donald Trump, who was once, of course, seen as the presumptive favorite, now seems to be much more in competition with Vice President Kamala Harris, as her 5-week-old candidacy has seen a surge in her polling relative to where Biden was before he dropped out of the race in July. But there are still 10 weeks to go, 70 days from today's election day to be exact. So a lot could still change. And we wanted to take stock of where exactly we are and our understanding of what each of these candidates, if they were to be elected president, would actually mean for financial markets and, yes, for crypto. So for that, we turn to Nathan Dean. He is Senior U.S. Policy Analyst at Bloomberg Intelligence, is here with me in our Washington studio. So, Nathan, I'm sure you're already fielding a lot of questions around this election from clients. Anyone who calls you probably wants to know if you have a feeling about what way this is going to go. My question is, are markets amiss to put too much attention on specifically who wins the presidency, when the reality is that they're very limited in what they're going to be able to do unless they sweep Congress along with them?
Yeah, so it's this idea of the Trump trade and the Harris equivalent, whatever we can think of for that. But really, there's two things to think about. One is the sector. So if you think if Kamala Harris wins, renewable energy is probably going to be cemented by the IRA status over the next few years. So they are going to be protected by whatever policy that would seek to detract from their earnings going forward. So you have the sector level. But then you have the macro level. And when it comes to whether President Trump wins or Kamala Harris wins, the question ultimately is, what's the control of Congress that goes with that? And so, we've seen a lot of the Trump trade talk, for example, in that piece, talks about a unified Congress with the presidency. So if President Trump wins and the Republicans get the House and the Senate, then they have this idea that they can use reconciliation, do grandiose, big, broad message bills. Same thing could be if Kamala Harris wins and the Democrats take the House and the Senate. And so that's where you get a lot of the market-moving inflation bills, if you will. So I think that's the macro level aspect of this piece.
Well, and I actually wonder if the ultimate outcomes for markets might be the same, even if the policy route to get there might be different, if it's a red sweep or a blue sweep. Like if it's a red sweep, major tax cuts, potentially adding trillions of dollars to the deficit through that. Obviously, that has its own inflationary effect. If you get Harris, you get more subsidies. For example, $25,000 payments for first-time home buyers to help with the down payments specifically. Both of them could bring no tax on tips. Aren't we talking either way if they have congressional cooperation of deficit increasing, inflation increasing policies either way?
Absolutely. So let's just play this out.
Yeah.
If Vice President Harris wins and the Democrats get a pretty decent size in Congress, you are going to essentially see more subsidies, additional, think of Inflation Reduction Act 2.0, money that's going out either through the carrot side or directly out to help subsidize sectors, communities, and so forth. If President Trump wins and you get these tax cuts, if you will, and remember, 2025 is going to be a tax debate no matter who wins. Yeah. If the tax cuts come in, again, that's more money that's going out into the pocketbook of the individual American, because those Trump-era tax cuts expire at the end of 2025, most likely will continue. And President Trump has even said the corporate tax rate would like to go down to 15%. So ultimately, that outcome is the same. And so from this Trump trade talk and this, Wall Street thinking of it, ultimately is whatever side wins the White House would ultimately have to win both the House and the Senate to go with it. If you get a gridlock Congress, everything that we just discussed is going to be tempered, negotiated, and much smaller. And so this grandiose idea of inflations or deficits or anything like that gets pushed down into just, more sector level specific bills.
Okay, fair enough. I do want to zero in more on tax policy, though, because tax cut advocates, if you will, that I've spoken with have said the majority of what is expiring are actually tax cuts that Democrats may want to preserve for not corporations necessarily, as there was a permanence to those, but this notion of small businesses, for example, or people of certain income brackets that Democrats may be more sympathetic to in terms of lowering or keeping their tax rates low. So I wonder, Nathan, how much, assuming we do have a divided Congress, if we're operating in the world which everyone thinks is most likely, you have a question around the presidency, but a red Senate and a blue House, flipping both chambers. Are we likely to still see some of the same outcomes even in a divided government, because there are going to be at least enough Democrats who want to cross the line to preserve what Trump passed in 2017?
Absolutely. I think, our general philosophy is, and this is with Andrew Silverman, our tax analyst, we were discussing this, our general philosophy is that most of the tax cuts that are expiring at the 2025 are going to continue. Nobody wants to be seen changing tax cuts for individuals, post an election year. Go back to George H.W. Bush, read my lips, no new taxes. That didn't really work out well for him. And so if Kamala Harris wins, you're going to see Democrats pushing for these tax cuts to remain. If President Trump wins, they may try and go a little bit further, but ultimately, again, may negotiate. So, when it comes to this whole tax debate, it really is, how do you pay for this? Is it the SALT deduction for those of you in New York and New Jersey?
Yeah.
Is it the corporate tax rate? Does this go up to 22% as opposed to the current 21%? So they're going to have to negotiate over how you're going to pay for it. So there's going to be small nuanced details, but ultimately we do think that this tax cut of President Trump from 2017 will continue on, and you may see another version of it for the next 10 years or so.
Well, it's not just tax cuts that Donald Trump says he wants, but he wants to be a crypto president this time around. It seems he wants all Bitcoin mined in the U.S., wants it to be the crypto capital of the world. How should we be thinking specifically about the crypto policies of each of these candidates, knowing the Biden administration hasn't necessarily been crypto enthusiastic, shall we say? There's regulators who have been quite hostile to the industry. Is Harris likely to create some separation, or will it be more of the same?
It's going to be very close. Ironically, when it comes to the legislative side of the crypto debate, we think that Kamala Harris is somewhat close to President Trump in terms of, because it's going to be driven by Congress, it's not going to be driven by the White House. So we actually have decent odds. We have 60% chance under a Harris presidency, 70% chance under a Trump presidency that something that looks like the Financial Innovation and Technology Act, can pass next year. This gives the SEC authority over securities, CFTC authority over commodities, additional stablecoin language. Now, that's the legislative side. The regulatory side can be different. We don't think Gary Gensler is going to stick around at the SEC.
Harris wouldn't keep him in there, you think?
We don't think so. Not for, maybe for a couple months while they work through the other nominations, just to make sure that it doesn't go to a 2-2 SEC. But if Chairman Gary Gensler moves on and somebody else comes in, the regulatory side may be different. We don't know who that person would be under a Harris presidency. Under a Trump presidency, we would have to imagine it's somebody that would move forward with a rulemaking to conduct, saying, here's additional clarity on how the SEC approach to crypto is. Ultimately, though, we think the crypto policy is somewhat favorable to firms, no matter who you get, Harris or Trump. But just remember, it's going to be expensive. Yeah. There's going to be a lot of costs associated with it. So some people in the crypto world may not like it, but for those established firms, and we see this all the time, they usually grab up market share to the small mom and pops. They're going to have to pay for this crypto framework, but they'll, I think, ultimately get it.
Well, and to your point about a lot of this is going to have to start in Congress. They will actually write the laws which dictate which regulator has what authority. I think that probably is part of the reason why we're seeing Fairshake, for example, these crypto super PACs, which have literally over $100 million to dispose in this election, are doing so in the down ballot races. They're focusing on, say, the Senate race in Ohio, which is the current banking chair, Sherrod Brown, up against Bernie Moreno, who is a crypto guy himself. How are you watching the way money is flowing and ultimately the way crypto money could actually impact the ultimate balance of Congress?
Well, this race is going to be, and I say race, this election is going to be extremely close in so many different races. Presidential, the Ohio Senate race, like you just mentioned, the Montana, the Nevada Senate races, extremely close. When you're talking about 100 to 150 million Americans are going to be voting, and ultimately 200,000 Americans across 7 swing states are going to decide who the next president is, the crypto PACs that are out there say, hey, you know what? Maybe out of those 200,000, we've got 5,000, 8,000, 10,000 they're going to vote on our issue. So it's extremely important that, you are going to have a subset of crypto voters out there, and it may drive the Ohio race, for example. But we are going to see that the crypto folks are moving into the House down ballot races because just remember, we have three separate but equal branches of government. And so even though the president will come out and say, I want to do this on crypto, the folks on the other hand, on the other side of Pennsylvania Avenue down at Capitol Hill will love to say, well, we're going to write the law and we're going to send it to the White House.
Yeah.
We're just as important.
Well, just finally on that, it is worth pointing out, Congress still has a few legislative weeks at least to work with once they come back, deal with the government shutdown issue. Really, we're talking the lame duck session here where we may be able to see things get done. Do you think FIT 21 works its way through the Senate before this Congress is out? Will we see any crypto legislation passed?
No, actually, I just ate crow on the terminal figuratively earlier this week when I said that I lowered my odds of a stablecoin bill passing this year. I don't think it's going to happen in the lame duck. And the reason being is we've been waiting for a lot of language. Senator Schumer said he wants to get something done. I think that was just, in advance of just the Kamala Harris reset, if you will. But I think during the lame duck session, both Democrats and Republicans will think they can get a better deal next year, and so they'll wait.
Fair enough. It was interesting that Chuck Schumer was on the Crypto for Harris Zoom call earlier this month, along with the people you'd think would be usual suspects, like Congressman Wiley Nickel of North Carolina, for example. Of course, a friend of this program, as is Nathan Dean, Senior U.S. Policy Analyst at Bloomberg Intelligence. Thank you so much. As always, if Joe were here, he'd be referring to him as Dad, but I will just stick with Nathan Dean from Bloomberg Intelligence. We still have much more ahead on this Tuesday edition of Balance of Power, but first let's get a check-in on world and national news. Nancy Lyons has that for us in our 99.1 newsroom here in Washington. Hey, Nancy.
Thanks, Kaylee. The Israeli military says it rescued one of the more than 100 hostages still being held captive in Gaza. There aren't many details about the rescue operation, but IDF spokesman Daniel Hagari says the hostage was rescued from a tunnel in Gaza.
During a complex rescue mission, Qaid Farhan al-Qadi from the Bedouin community of Rat, who was kidnapped from Israel by Hamas terrorists during their massacre on October 7th, has been rescued.
Hagari says al-Qadi is in good medical condition and has been reunited with his family. National Security Advisor Jake Sullivan is in Beijing for a 3-day meeting with his Chinese counterpart, Wang Yi. It's the first visit to China by National Security Advisor to a U.S. president in 8 years.
We are working to ensure the competition does not veer into conflict, and that we find ways to work together where our interests align.
Sullivan and other senior officials will be discussing a wide range of contentious issues, including Beijing's support for Russia's war in Ukraine and Washington's tech curbs on China. A program that would give legal status to undocumented immigrants married to American citizens is being blocked by a federal judge. The Biden administration plan started earlier this month and would have affected around 500,000 immigrants in the country without legal status. Global news 24 hours a day and whenever you want it. With Bloomberg News Now, I'm Nancy Lyons. This is Bloomberg.
bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
It's 12:40 on Wall Street. I'm Amy Morris. A surprise boost in consumer confidence this month. We get details from Bloomberg's Michael McKee.
The Conference Board's Consumer Confidence Overall Index rises to 103.3. That's from a revised 101.9. The expectation was just for 100.7. So overall, that is good news.
Bloomberg's Mike McKee reports it's a good news for a Fed getting closer to cutting rates next month. Shares of Supermicro Computer are about 1.5% lower after sliding more than 8% this morning on word of a short bet on the chip maker from activist investor Hindenburg Research. We get more on that from Bloomberg's Sonali Bassett.
Hindenburg posting on their X page and their website, Supermicro, providing fresh evidence of accounting manipulation, sibling self-dealing, and sanctions evasion at this AI high flyer. Remember, Supermicro is a stock that has risen about 100% this year ahead of this short being announced.
Bloomberg Sonali Bassett. Supermicro did not immediately respond to a request for comment. We check markets for you all day at Bloomberg. The S&P 500 is flat, only a gain of about 1/10 of 1 point. NASDAQ is up 0.4 of a point. Pretty much everything is flat. The volume is really low today as everybody is waiting for these NVIDIA shares. The Dow is down, though, 101 points. That's about 0.25%. 10-year Treasury yield at 3.84% and the 2-year yield at 3.99. 2%. And affordable housing still an issue. CoreLogic says U.S. home price rose 5.4% in June from a year before. That is faster than the overall inflation rate. That is a Bloomberg Business Flash. Now back to Balance of Power with Kaylee Lines.
All right, Amy Morris, thank you so much. I'm indeed Kaylee Lines in for Joe Matthew today on this Tuesday, August 27th. And you know what that means? If it's the 27th of August, there's just 4 days left before Kamala Harris's self-imposed deadline, if you will, for scheduling a big sit-down interview. She has said she wanted to do that before the month of August was out, and yet here we are with no news of an interview on the books, and no news of who that interview might be with either. It's not just about the date. Of course, the convention ended 5 days ago in Chicago, and we haven't seen much of Harris really at all since then. So how much longer can she wait before voters start to get a little antsy for more answers? Or is it just us journalists and policy wonks who are hoping that this happens? On that note, let's assemble our political panel. Rick Davis is with me, Stone Court Capital partner and Bloomberg Politics contributor, alongside Jim Kessler today. He is Third Way Executive Vice President and Democratic Strategist. Welcome to you both. Jim, I'll just begin with you. Obviously, there was a lot of conversation around how maybe Harris didn't really need to do this before the convention. Just let that momentum ride, get through Chicago, then it's time for the interview. If that's the case, where is it? When is it? Why don't we have answers on that yet?
Well, I think we'll get some answers pretty soon. Look, the convention was the end of Act One for the Harris-Walz campaign. It was a very good act. It was riveting. People were in their seats. She gained momentum. She gained in the polls. And when you do that, you just don't change anything. You know, you don't change when you're gaining. And look, we're now at the point where Act Two is when you mix it up. You mix it up with the other candidate, Donald Trump. You're going to mix it up with the media. And I expect we're going to hear something very, very soon about, a sit-down interview somewhere for Kamala Harris.
The other thing to consider here, though, both of you, is that it's not just about trying to get this done before the month of August. If we bleed into September, we're going to be in, the single digits until a debate happens between Harris and Trump. Rick, that's scheduled for September 10th. Is there a danger in the candidate sitting down for an interview before sharing a stage?
Yeah, Kaylee, as you say, I mean, September 10th is going to be on us in a flash. And I am a little surprised that there wasn't more of a planned tour after the convention that would sort of lock in some of that bounce that she might have gotten from a good convention. Instead, she's kind of quieted down. Very unusual for a presidential campaign like that not to try and really burn in the positives from a convention. And of course, Donald Trump and J.D. Vance did the same thing. They kind of feathered down. And I just don't think this cycle's going according to the traditional script. So that being said, I do think every single day she doesn't do this interview, she creates more of an issue as to why isn't she doing these interviews? She just needs to get that monkey off her back, do the interview, show that she has the capacity to answer questions that are posed by a very inquisitive interviewer, and move on. This should not be something that the campaign needs to be talking about right now.
Well, and as I've said every day, we'll continue to say she's welcome to do that interview here on Bloomberg. We would love to talk to the vice president or former President Trump for that matter. But Jim, it does raise the question of who that interviewer should be. If it's not going to be me or Joe Matthew or one of our other wonderful colleagues, who is it that would be seen as fair and tough enough and not something that potentially could be biased, as Donald Trump has continually accused the media of being biased, of taking his words out of context? Is there a way for Harris to actually win in the mainstream media?
What we saw with the Joe Biden interviews after his disastrous debate performances, even if you're having an interview with a quote unquote friendly journalist, that interview is not friendly. So I do not believe that whatever interview she does will be a softball interview. It'll be a hardball interview. That's what reporters do. If it were up to me, my druthers, I'd have her go to a media outlet that plays against type. Either one that's on the right, like Fox News, or something like Bloomberg, which is right down the middle, economic-oriented, business-oriented. That would be my view. Do something that's a little bit different, change it up somewhat. They probably don't really care about my view on this, but that's what I would do.
I care about your view. I like that view, Jim Kessler, making the case for us here on Bloomberg. I appreciate that. As we consider what she needs to accomplish, it's also still worth taking note of what she, in absence of a big interview, has still been able to draw in. That includes hundreds of millions of dollars, as we have talked about repeatedly, across the $500 million fundraising mark. But she's also bringing in endorsements, Rick. And as we saw with Joe Biden in 2020, once again, there are more than 200 former Bush, McCain, and Romney staffers who have come out and endorsed her. What does that say? Do those endorsements really matter in today's Republican Party that in many ways arguably has moved on from those three individuals?
Yeah, the party's definitely different. When we were at the convention in Milwaukee, it was a completely different demographic than when most of these people served in government around these campaigns you mentioned. And the reality, too, is most of these folks were never Trumpers, right? They were against him in 16, they're against him in 20, they're going to be here again. But they are Republicans. I mean, it is against type to have Republicans, people who have worked their entire careers in some cases, promoting Republican orthodoxy in Congress and the administrations and campaigns, to turn around and say, you know what, it's not enough for Donald Trump to be a Republican anymore. He is such a negative that we're willing to hold our nose and vote for and endorse Kamala Harris. And I do think that still packs a punch when it comes to the electorate.
Well, and certainly we saw that on display on the stage in Chicago at the Democratic Convention when former Republican Congressman Adam Kinzinger spoke, former Georgia Lieutenant Governor Jeff Duncan spoke, kind of arguing similar messages to what you were just talking about, Rick. I do want to ask you about another endorsement as well, given your knowledge of the state of Arizona. Last Friday, the Arizona Police Association endorsed Donald Trump over Kamala Harris for president. Then yesterday, they endorsed Democratic Senate candidate Ruben Gallego over Republican Senate candidate Kari Lake. What does that say to you?
That says to me that the traditional politics of organizations like the police, where they tend to go straight down the Republican ticket, for instance, is all jumbled up by the candidates themselves, right? And Mitch McConnell very smartly said back in 2020 and 2022, candidates matter. And in fact, he was referring to Kari Lake, who was on the ballot for that in 2022. And so the reality is she has found herself in a Senate race where even Republicans aren't supporting her. And this is a manifestation of that a group that traditionally goes right down the line on Republican support is willing to cross the aisle and support an individual who has not been in the mainstream of their views in Arizona. And I think that just shows you the power of supporting people, just like we were talking about with Kamala Harris, who don't necessarily share your ideology, but the opponent is such an anathema that they are willing to cross over and cast their ballots, cast their endorsements for that individual.
Well, what's interesting is that you're also seeing some people cross over for Donald Trump himself, not Republicans going Democrats, but people who were Democrats coming over to him. Jim, the Trump campaign today announces that co-chairing his transition team will be Robert F. Kennedy Jr., who of course left the presidential race or suspended his campaign last Friday and endorsed Donald Trump, and former Democratic Congresswoman Tulsi Gabbard. Jim, RFK Jr. and Tulsi Gabbard running Donald Trump's transition team. What is your immediate reaction to that?
God help us. Look, I thought RFK, when he got in the race as an independent candidate, his goal was to try and elect Donald Trump. He hasn't been a Democrat for a long time, neither has Tulsi Gabbard. You know, if you believe in the, quote unquote, weird meme that's coming out that this Trump Vance ticket is, supporting weird policies, attracting weird people. Like these are kind of two oddballs, and they're both like Putin supporting politicians and conspiracy theorists. If you're a Nikki Haley Republican who's either soft on Trump or not sure, I think if you compare the two sets of endorsements, what Democrats had with Adam Kinzinger and others, and what Trump has had with Kennedy and Tulsi Gabbard, I'll take the Democratic endorsements for Harris over the endorsements for Trump.
Well, almost as if they're listening to us, a Trump fundraising email just hit my inbox saying, Robert F. Kennedy Jr. just proudly endorsed me. Thank you, Robert. RFK and I are both sworn enemies of the warmongering, corrupt swamp that occupies our nation's capital. Jim, I know that you just said you wouldn't prefer this endorsement to some of the others that Harris has received, but of course at Third Way, you were very focused on the idea of third-party candidates potentially being spoilers in this election cycle. Your primary concern perhaps was No Labels, which of course abandoned its plans to run a unity ticket long ago. Was there still a risk that RFK Jr. was going to be a real spoiler? And now that he's gone, has he had that effect still for one candidate or another and being able to pull votes towards someone else?
Let me start with a premise, which is this. Donald Trump has a ceiling of votes. It's probably around 47%. He got 46.9% against Joe Biden in 2020. He got 45.8% against Hillary Clinton, which was enough to win the Electoral College race. So if you believe that Trump has a ceiling and the race against Biden was one-on-one without third-party candidates, any third-party candidate out there siphons votes away from that other 53% for the most part. So my view, my organization's view is Kennedy being out is a net positive for Harris, even though some of the polls show that with Kennedy's dwindling support down to like 3 or 4%, that it might have leaned a little bit Trump. You know, again, if you think that Trump has a ceiling, you want it as close as possible to a one-on-one race if you're Harris.
Well, Rick, in our final moment here, I wonder if you agree with that actually this could be net benefit for Kamala Harris. Are we going to see that show up in the next polls that come out that no longer have that RFK Jr. third-party option in play?
Yeah, I never disagree, but on polling like this, and I think, Kessler's right in the sense of what it portends for the future. But look, at the end of the day, I think the reason this deal got done is because the amount of support that Kennedy was down to was probably mostly Trump supporters. And so the last thing Trump wanted was somebody hanging around out there siphoning off even a few votes, because different from the percentages, we're talking tens of thousands of people in Michigan, a couple thousand people in Arizona. These are the folks who could decide the race. And I think they've made the calculated risk that it's more important to get Kennedy out, give him a role. Who cares what happens to him? But we cannot have him taking up a couple thousand of our votes in one of these swing states, because that's where the action is this year.
All right, Rick Davis and Jim Kessler will be back with me in the second hour of Balance of Power. Thank you to you both. Rick, you could take this break to play skee-ball or Pac-Man or whatever it is that's behind you there. If you're on YouTube, you know what I'm talking about. It looks like the Rick Davis Arcade on this Tuesday. That seems somewhere perhaps a bit more fun than a cold TV and radio studio where I find myself at the moment. Rick, Jim, I'll see you shortly. Thank you so much for being with us on this Tuesday edition. We do still have much more ahead in addition to Rick and Jim. In our second hour, we'll be speaking about the Middle East as well. Put an eye on geopolitics with Carmel Arbit of the Atlantic Council after Israel freed a hostage being held by Hamas in Gaza earlier today. We'll also speak with Aaron Covey of the Cook Political Report, consider the down ballot races as well. So stick here with us on Bloomberg. I'm Kaylee Lyons, and this is Balance of Power. The second hour is straight ahead.
Balance of Power. Live from Washington, D.C.
Welcome to Balance of Power on Bloomberg TV and radio. I'm Kaylee Lines. Joe Matthew is off today. And on this Tuesday, we are following the campaign trail here at home as both tickets crisscross the swing states this week. Harris and Wall set to embark on a bus tour of Georgia tomorrow. We'll have the latest with Aaron Covey of the Cook Political Report and our political panel, Jim Kessler and Rick Davis today. Plus, we're following developments in the Middle East as Israel frees a hostage held by Hamas in Gaza. The world is watching for potential escalation from Hezbollah or even Iran itself. Carmel Arbit of the Atlantic Council will also be with us this hour. But first, though, as always, we got to get a check on the markets. And Amy Morris has a look for that here in Washington. Hey, Amy.
All right, thank you, Kaylee. Struggling with plunging demand for its COVID products, Pfizer has a new plan to reach potential customers, cutting out middlemen and selling drugs straight to patients. The company launched a new website today called Pfizer for All that allows users to schedule vaccine appointments or meet virtually with doctors who can prescribe the medicines for COVID or migraine or other conditions, and then they're shipped directly to the patient's doorsteps. Shares of Pfizer down about 1%. Eli Lilly now selling vials of its blockbuster weight loss drug Zepbound to patients for as little as $3.99 a month as it works to overcome supply shortages. Patients with a prescription for Zepbound can purchase a month's supply of single-use vials through Lilly's direct-to-consumer site starting today. The vials are priced at about half of what the shots would cost. Zepbound is typically sold in an auto-injector pen. Shares of Eli Lilly are about 0.5% higher. And of course, we check markets for you all day long here at Bloomberg. The S&P 500 is about 2.5 points higher. NASDAQ is up 8 points, and the Dow is down 69 points. Not a lot of movement right now on Wall Street. Consumer confidence rising, though, for a second month in August on more upbeat views of the economy and inflation. The Conference Board's gauge of sentiment increased to 103.3 from an upwardly revised 101.9 a month before. The median estimate in a Bloomberg survey of economists called for a reading of 100.7. And a measure of expectations for the next 6 months rose to 82.5 in August from 81.1. Present conditions increased to 134.4 from 133.1. That is a Bloomberg Business Flash, and we go now back to Balance of Power with Kaylee Lines.
All right, Amy Morris, thank you so much. I'm indeed Kaylee Lines, and on Balance of Power today, we have our eye on geopolitics, not just what's happening in the Middle East, though certainly it's consequential and worth discussion. We will do that in just a moment. But I also want to talk about what's taking place in China this week. A visit from U.S. National Security Advisor Jake Sullivan to Beijing. Well, he'll be meeting with the Chinese foreign minister, potentially even with Chinese President Xi Jinping himself. China, for its part, says it's going to be bringing up issues related to Taiwan and tariffs. But the question, as ever with visits like these, is whether or not there will be an actual tangible outcome to these kind of talks, or if they're just talking for the sake of doing so. Bloomberg's Ian Marlowe is here with me in our Washington, D.C. studio now to help answer this question. He's a senior reporter covering foreign policy for us here at Bloomberg. So, Ian, what is the aim of this trip? Are we going to see something firm that Sullivan will be taking away?
I assume no. I assume we're going to see much of what we've seen over the last 6 months to a year with this administration, which is sending senior delegations over to try and just sort of maintain an acceptable level of instability to some degree, because the U.S. and China do not agree across a range of fundamental issues. The point now is to just manage those differences. And I've been on some of these trips to China with the Secretary of State, and they're much the same. They almost always say there's not going to be anything tangible or concrete coming out of it, but the goal is to keep the talks going. So I think that's to some degree what we're seeing here.
I would be correct to say that this is the first time we're seeing a Biden administration official make a trip to China since Biden effectively made himself a lame duck president, right, and announced he's not seeking re-election. I would just wonder how that might change the nature of these conversations when it's kind of a notion we might not be dealing with you a few months from now. So why would we cooperate and collaborate at this point.
Yeah, I think so. I think there's definitely, like with a lot of foreign policy at the moment, there's a bit of a sort of Trump-proofing idea here that they're trying to solidify some gains to go through no matter who wins in November. But I think there's still always, just with Jake Sullivan, the National Security Advisor, I think there's a lot of, he's been doing these meetings at a sort of regular cadence over the last few months, last year or so, with these senior Chinese officials. And I think there is some stuff they do want to continue pushing. There is China's economic aid to Russia, which they worry has, effectively given Russia more of a fighting chance in Ukraine. They're still angry about that, but they still aren't able to kind of twist China's arm to some degree to get them to stop that aid. That's the main thing. And then the other stuff is really just, it's sort of the laundry list of things you see in these U.S.-China meetings, Taiwan, tariffs, and other things. So I think there is still stuff to discuss. It's just, I don't think we're seeing any fundamental change in either side's position right now.
All right. Well, that reminds me of some other talks that are happening in which we haven't really seen many changes in either side's position, which is the ongoing ceasefire negotiations between Israel and Hamas and the other mediators, including the U.S. Israel did have success in rescuing a hostage from Gaza today that was being held by Hamas, a 52-year-old man, a father of 11. There are still 100 more being held, either alive or otherwise. Ian, what is the feeling today on the likelihood of a deal to bring them home? Or are hostage families only going to get the kind of closure or their own family members back that they need by these kind of individual rescue operations that we know are very complicated and have taken a lot of time to carry out?
Yeah, the U.S. has been putting a lot of pressure on Israel to try and bring home a deal here. There is, the complicating factor that they're dealing both with a country that has a very complicated internal political dynamic. Netanyahu has a fragile coalition, some of the members of whom do not want a ceasefire at all. And the other side of the table, there's a terrorist group, some of whom Israel has assassinated over the last several months. So it's a fragile dynamic that I believe ever since Biden kind of stepped out and owned the ceasefire process, laying out this three-stage proposal that he said Israel had agreed to, and then it was just on Hamas to agree to. Ever since that, the U.S. has been very positive, sort of endlessly optimistic about the deal and the potential of a deal. So we hear language like a bridging proposal, or it's a final bridging proposal. We just need to close the gaps on certain things. But really, you're talking about two sort of, fundamentally opposed parties that are at war, some of whom have hostages, the other whom is assassinating the negotiators for the other. And I think we're still quite far. I mean, it's a sense that there is a sense in Washington that this deal is still not likely to come to fruition anytime soon. And to some degree, it's for Netanyahu, keeping the negotiations spinning out while he's also doing military operations is sort of to their benefit to some degree. The only pressure he feels to some degree faces is on the hostages and from the hostage families within Israel.
But do you think that's also true of other Middle East players largely? The idea that because all of these different actors are still either physically or otherwise at the negotiating table, that is preventing further escalation when it comes to Israel and Hezbollah, even though we did see those preemptive strikes from Israel over the weekend, or Israel and Iran directly for that matter. How does that wider backdrop of the other proxies and players fit into these ongoing conversations around a ceasefire with Hamas?
Yeah, I mean, I think the U.S. believes that the ceasefire deal and negotiations remain sort of the primary driver, the only thing that can sort of end the sort of endless cycle we've seen of escalation on Israel's side, escalation on Iran's side, and through its proxies. So it remains the sort of core focus, but at the same time, there's now this sort of frisson of danger around the region of this sort of looming retaliation from Iran that we haven't fully seen for the assassination of the Hamas political chief in Tehran, which was quite bold, obviously, and was bound to lead to something. So I think at the moment there is still this general sense that the region remains on edge. But to be honest, it has remained on edge, for almost a year now, since October 7th, and both sides have managed to calibrate their responses to the point where there isn't this sort of like dangerous escalatory cycle that gets out of control, and then you see sort of Israel and Iran in direct confrontation and the U.S. getting pulled into that. So I think that remains a possibility, but I think a lot of people are sort of confident that it's being managed to some degree.
All right, Ian, thank you so much for being here. Ian Marlowe is a senior reporter covering foreign policy for us here at Bloomberg. And we want to continue this conversation now and bring in Carmel Arbit to Balance of Power here on Bloomberg TV and radio. She is senior fellow for the Middle East programs at the Scowcroft Middle East Security Initiative at the Atlantic Council. Carmel, welcome back. It's always good to have you. I'd like to begin with just a point that Ian was just making about how the U.S. has seemed endlessly optimistic about the prospects for a ceasefire agreement getting done. We've had a number of head fakes, it feels like, and it never actually results in a finalized deal in which all parties agree. So do you see that as the Biden administration, the U.S. being disingenuous with the actual state of play, or is it that they do feel like they keep getting close and then the rug gets pulled out from under them?
Thanks so much. I think it's a combination of the two. The Biden administration has made clear that it is deeply committed to bringing about this ceasefire. And so they're very invested in that outcome and are bringing that optimism to the table to try to cajole the parties along. I think every time they think they get closer or they find a resolution on one issue, another issue comes up. Eventually, there's going to be a ceasefire. Without a doubt. The question really is one of timing. One negotiator described the process at this moment as artificial respiration. I think that's a little negative, but reflects how negotiators are feeling, that they're breathing and chugging along here, but that it's not achieving the breakthrough that they had hoped for at this stage.
So if you do operate under this assumption that eventually there will be a ceasefire, it is just a question of when. What would your bet be on when at this time, Carmel? Because the longer this draws on, the closer we get to an election here in the U.S. and a new player potentially coming in who could completely change the game, theoretically, at least the policy position of the U.S. and in the way in which they're trying to exercise leverage in all of this. Is this something that realistically can happen before November?
I think it's certainly possible for it to happen by November, but there are significant factors that are pulling both parties away from achieving an agreement. You have, on the one hand, Netanyahu, who sees the prospect of a Trump administration as a positive outcome for him, who might want to take that gamble as he thinks through negotiations and what types of concessions he might have to make. On the other hand, you have Sinwar, who sees the prospect of a regional war as strengthening his hand. And so you have two leaders who have really conflicting political interests, whose negotiators who are working for them keep coming closer and closer to an agreement, and yet the leaders themselves keep pulling back. So I think it is certainly in the realm of possibility. What we're hearing is that they keep getting closer. The two main sticking points right now are over Israel's continued military presence in Gaza, which is key for Netanyahu and something that Hamas and Egypt really are opposed to. But we continue to see forward momentum on questions like the identity and number of hostages that will be released, or the identity and number of Palestinian prisoners that will be released. So we see them getting very close. It's possible, but the timeline really is a big question.
Well, and to ask you a different version of the question I just asked Ian, to what extent do you feel that these conversations, as close as they may be getting, or the ebbs and flows, or what is actually preventing the retaliation that's been expected by Iran and Hezbollah for well over a month now in reaction to the assassinations of a Hezbollah and Hamas leader back in July in quick succession? We obviously saw Israel trying to thwart an attempt by Hezbollah, they say, over this past weekend, but I can't imagine that was really it, Carmel. How does the action of Hezbollah and Iran moving forward have a through line to what's happening with Hamas and Israel and the mediators at the table?
Yeah, so the regional conflict has been heating up slowly and continually. So what we saw over the weekend was kind of a moderated escalation where there was a significant strike by Israel, but yet limited in range. It really focused on the border areas. And similarly, an attack by Hezbollah that was larger than what we've seen in the past. At the same time, we haven't seen either country push forward into a full-blown war. The U.S. and regional allies are really committed to keeping the temperature low, to moving forward with a ceasefire. Israel has significant constraints as it deals with a multi-front war. it is in the interest of everyone to try to keep this quiet. That being said, it's not going to go away. This isn't going to just resolve itself on its own. I think what we're going to continue to see is this kind of quiet staging of escalation over time that we're already in, but not necessarily a full boil all at once.
Carmel, I also want to ask you about something that the Trump campaign is paying a lot of attention to this week, which is the third-year mark of the U.S. withdrawal from Afghanistan. Yesterday, of course, marking 3 years since 13 U.S. service members were killed in the suicide bombing at the airport there. I asked Jennifer Kavanaugh of Defense Priorities last night about whether or not it is a fair characterization to describe the events we have seen take place over the last 3 years, including these escalating tensions in the Middle East, if part of the blame does lie on that rather chaotic withdrawal from the U.S. that we saw back in 2021. This is what she told me, and then I'd like your take.
Certainly left much to be desired in terms of its organization and communication with allies and partners, but it hasn't really damaged U.S. relationships with any of its European or Asian allies or partners. It didn't really have any ramifications in the Middle East. And in terms of the kind of broader terror threat that people have warned about, that too hasn't really affected U.S. national security. And in fact, the intelligence apparatus has shown its proficiency in detecting these attacks ahead of time. So I think it's a little bit of a red herring.
Neil, if you agree with that, and if we're assigning blame here, to what extent you believe that this was just a Biden administration problem versus responsibility that may lie with Donald Trump himself, having agreed to the pullout with the Taliban during his administration?
Yeah, I think there's plenty of blame to go around, and both administrations are complicit in the withdrawal from Afghanistan and the events that transpired afterwards. As you said, the Trump administration had drawn down troops and committed to the withdrawal on the timeline that Biden then executed. I think what we're seeing right now in an election season is that the Trump administration, the Trump campaign sees an opportunity here to really seize on this issue, to point to one of the kind of gaffes of the Biden-Harris administration as a way to gain political leverage. But there's plenty of blame to go around for both campaigns on this issue.
Mm. But when it comes to what they are actually being blamed for, to kind of the point I was asking Jennifer about as well, how much do you think of the intensified conflict, the outright conflict, of course, between Israel and Hamas, the trading of fire with other Iranian proxies, the general higher tension in the Middle East as a whole, is because of the pullout from Afghanistan? Or do you think that these things actually are not as related as they may be made out to be?
Yeah, I would actually really differentiate between what happened in Afghanistan and the timing of what happened and what's going on right now between Gaza and Israel, because what you have are two really distinct conflicts in some largely distinct territory regionally, where we've seen kind of the U.S. fight against terror and broader interests in the Middle East that it has sought to disengage from over time have been unsuccessful. But that's really the extent of the through line that I would see there. I think what you have instead is a conflict between Israel and the Palestinians that has been going on since the establishment of the Jewish state, that is being fueled by Iran and by other neighbors in the region. And at the same time, a conflict that happened in Afghanistan, a war that has been winding down, and the control of the Taliban that has continued to subjugate the rights of people in Afghanistan.
All right, Carmel, always appreciate your insight. Thank you so much for joining us. That's Carmel Arbit of the Atlantic Council, joining us here on Balance of Power on Bloomberg TV and radio, and we still have much more ahead. We'll reassemble our political panel next on Bloomberg.
It's 1:21 on Wall Street. I'm Amy Morris. American consumers felt more confident in August as their outlook for the future improved. The Conference Board says its Consumer Confidence Index rose to 103.3 in August from 101.9 in July. The median estimate in a Bloomberg survey of economists called for a reading of 100.7. Investors are gearing up for big swings in NVIDIA's shares when it reports earnings tomorrow. We check the markets all day long at Bloomberg. What we have today, S&P 500 up 0.1% or 8 points. NASDAQ up 0.1% or 30 points. And the Dow is down 0.1% or 43 points. The 10-year Treasury yield at 3.83% and the 2-year yield at 3.9%. And super micro computer shares are now down 2.2% after Hindenburg Research said it's short the maker of server equipment. The stock fell as much as 8.7% after Hindenburg wrote that an investigation into the company revealed glaring accounting red flags, evidence of undisclosed related party transactions, sanctions, and export control failures, and customer issues. Supermicro did not immediately respond to a request for comment. That's a Bloomberg Business Flash. Now back to Balance of Power with Kaylee Lines.
All right, Amy Morris, thank you so much. I'm Kaylee Lines, flying solo today as Joe Matthew takes this Tuesday off. Welcome back to Balance of Power on Bloomberg TV and radio. And it is on this Tuesday that a new ad is running in battleground states, an ad by the Harris campaign titled Every Day. It focuses on the economy specifically and includes some of the policy proposals that Kamala Harris outlined in North Carolina earlier this month when it comes to price gouging and housing. Here's a little bit of it.
I will be laser focused on creating opportunities for the middle class that advance their economic security, stability, and dignity. If you want to know who someone cares about, look who they fight for. Donald Trump fights for billionaires and large corporations. I will fight to give money back to working and middle class Americans.
So she says she'll be fighting for working class, middle class Americans, but a lot of these ideas still are quite broad in nature. We don't have many specifics on how exactly she does that. Granted, specifics are missing in some of the policy platforms of the Republican ticket as well. So let's bring in a Republican and a Democrat now to discuss. Our Republican panelist today, Rick Davis, Bloomberg Politics contributor and Stone Court Capital partner, together with Democratic strategist Jim Kessler, who is the executive vice president at Third Way. Rick, I'll come to you first, as you've obviously had plenty of experience putting campaign ads together as well. Is this a message that is going to resonate, considering the audience where it is targeted, the battleground states that ultimately will decide the outcome of this election? Or do those voters, the ones who could swing either way, those just thousands realistically we're talking about in each of those states, need something more specific?
Yeah, it's a good question, Kaylee. I think that one of the things that this represents is the big pivot away from the national campaign that Kamala Harris has been running, the big convention consolidation of power within the Democratic Party, and really finally targeting even more so the suburbs in key cities around these targeted 6 states, 7 states, places like Pittsburgh suburbs, Philadelphia suburbs, Maricopa County, Arizona. And they are talking to an issue that a lot of voters have concerns about, especially those voters that might be willing to vote Democrat, who maybe are independents or unaligned voters, and that is on housing. And that is probably one of the areas where she's actually presented the most specific kind of proposals that she's talked about 2 Thursdays ago during her announcement of her economic plan. And so this might be the one area where she's got a little teeth to bear. And I think that gives her substance. It gives her something that sounds like she's got well thought out proposals that don't really sound too democratic in nature. And so I think she's trying to do a lot of things at one time, but you're right, they are chasing tens of thousands of votes in these key locations. And this is where the rest of the campaign is going to be seen, not by the rest of the country, but by these suburban locations around these major cities in the key swing states.
Well, and it is worth pointing out in these key swing states that Donald Trump and J.D. Vance are spending a great deal of time in them this week. In fact, J.D. Vance is speaking in Michigan right now, also on the subject of the economy. But Jim, before we head back to what the Republicans are proposing and think more about Harris and the language we just heard her use in this ad, talking about being for the middle class, it does sound pretty similar to the message we've gotten from the president she has served with over the last 3.5 years. Joe Biden, how often have we heard him say, the middle class built America and unions built the middle class? Kamala Harris trying to paint herself as union friendly as well. Is she creating enough distance separation between the economy she would like to create and the policy proposals she would like to use to do it versus the one Joe Biden has created, knowing that he didn't very well get good marks on that while he was still in this race?
I think there's some key differences between the way Harris talks about the economy and Biden. One is it just feels a lot more modern when Harris is talking about it, and Biden's going back to what his dad used to tell him when, in the 1940s and 1950s. Like, it just felt very nostalgic. I'm struck by how Harris's language and proposals are very centrist Democratic with a populist chaser there. So opportunity economy, those were not Biden words, those are Harris words. Security and stability for the middle class, again, those are Harris words, those aren't Biden words. And, in terms of policy specifics, if you go back to 2016, Hillary Clinton had 264 policy ideas on her website, everything from Alzheimer's to Zika. Donald Trump had 7. So, this is not a quantity game out there. It's really about quality.
Well, okay, if it's not about quantity but quality, what about the quality of ideas that actually are the same that both candidates seem to be agreeing with? Like, for example, Jim, no tax on tips. It was Donald Trump's idea first before it became Kamala Harris's. What distinction will voters actually make in that regard if both candidates are saying similar populist things?
Right, and I just want to be clear, I don't love that idea from either candidate.
Okay.
This is what Rick Davis was talking about. This is Nevada, in some other places, but Nevada is very tip-centric state, okay? So it's like, how are you getting some younger voters? How are you getting service workers who are relying on tips that are swing voters, low propensity voters and low information voters? So I do think some of these ideas are like a direct play for voters, and others are more broad economic ideas.
Well, Nevada, of course, one of the Sun Belt states that it does seem, if polling is to be believed, Harris stands a better chance than Joe Biden did of carrying them. He was very focused on the Rust Belt, and it is another Sun Belt state, Rick, where we'll see Harris and Walz spending a few days this week, beginning tomorrow, a bus tour in Georgia that will run through Thursday. What is the messaging that would actually put them over the finish line in a state that, according to the New York Times Siena latest poll, Trump is up by 4. It is within the margin of error. He does have a little bit of beef, if you will, with Governor Brian Kemp. How in play is Georgia really for Harris? What would it take for her to win it? Is this economic messaging?
Yeah, she's going to have to replicate some of the magic that Joe Biden put onto the state in 2020. It's not a dissimilar election, not a dissimilar electorate. She has to sow discontent with Republican voters. Obviously, as you mentioned, Donald Trump has a love-hate relationship with the GOP in Georgia, and so she's going to have to do what she can to suppress that vote, keep Republicans thinking maybe Trump's not the guy for them, and then at the same time, do everything she can to boost her base, because the reality is this is going to be a base election in Georgia more so than tipping the balance with some suburban voters around Atlanta. She's going to need a bigger turnout, especially amongst African-American voters that have really supplied the wins in the past when they've had them for Democratic candidates statewide.
Well, so when we consider what plays to the base, Jim, it does bring us to the abortion issue, something that we have seen does drive turnout. At least it did in 2022. It has in special elections in the states in which the abortion question has been on the ballot. It also seems to be one that Donald Trump is trying to get more moderates in his corner on as well, with this kind of characterizing himself now as someone who will be great for women's and reproductive rights. J.D. Vance saying that Donald Trump has committed to him that he would veto a federal abortion ban. Do you think these voters who may actually vote on this issue, a group of them who are driven to the polls on this issue, will buy into that at all?
If you're driven by this issue, you are not going to buy into the change of position, essentially, of J.D. Vance and Donald Trump. If you go back in time 6 weeks, there were 2 issues bedeviling each campaign. For the Biden campaign, it was age. And for the Trump campaign, it was the Dobbs decision and abortion. Harris has solved the age issue. Republicans have not solved the abortion issue. And Democrats have generally overperformed the polls and expectations in every election since Dobbs. Few exceptions, but in almost every one. So I think Republicans have a right to be afraid.
Okay, well, Rick, as the Republican, I'd love for you to weigh in on that, because we have been talking about this issue being something that very much does dog the party, and that it's very hard for them to find a clear messaging line on this that seems to work, seems to stick. Do you think this one will, this leave it to the states, no federal ban, is something that Republicans can actually win on? Not just Trump and Vance, but others as well.
Yeah, I think this is an effort not to win on it, but just to keep the pain down to a low threshold for Republican candidates. And so, but like they have a few things going against them. One is they got a referendum in Arizona that's going to turn out voters on the choice issue. And so they're going to be fighting a two-front war there. The other thing I would remind everybody is there were a lot of Democrats who took advantage of the decision on the Dobbs to generate wins in a lot of states. But some of those wins came because they have a higher propensity of voters than Republicans have in the off years, especially they show up. And so this is an election where I think you have to assume everybody's going to show up. And so that advantage tends to get neutralized a little bit. And so it tends to mask the victories that a lot of pro-choice voters have been claiming for the last 4 years. But they should be cautious because those victories may not show up on Election Day in 2024 just because everybody else is.
All right, fair enough. Jim, in our final minute with you, just on this notion of voters potentially being turned to the polls, especially in states where abortion is on the ballot, like Arizona or even Florida, does it make you reconsider as well who can win the congressional races in those states? What Democrats' odds may be of, say, flipping Senator Scott's seat in Florida blue?
So that could happen if there's a wave. Certainly right now, there doesn't appear to be a blue wave, although the odds of a blue wave are certainly greater than it was 5 weeks ago. If you talk to congressional Democrats, they are far more optimistic about their chances to win battleground states and pick up, some tough races than they were 5 or 6 weeks ago. So the optimism is there, the money's there, it feels like there's some momentum. Florida's tough, Texas is tough, not impossible.
All right, Jim Kessler and Rick Davis, our political panel today. Thank you both so much for joining me. Appreciate your time. And we're going to continue this conversation on the down ballot races to watch what the actual composition of Congress could look like after November, as that is just as important potentially as who's going to be president in terms of the actual policy making we've been discussing. Aaron Covey of the Cook Political Report, who focuses on congressional races, will be with me next here on Balance of Power. So stick with us on Bloomberg TV and radio.
It's 1:40 on Wall Street. I'm Amy Morris. Consumer confidence rose for a second month in August on more upbeat views of the economy and inflation. The Conference Board's gauge of sentiment increased to 103.3 from an upwardly revised 101.9 a month before. The median estimate in a Bloomberg survey of economists called for a reading of 100.7, and a measure of expectations for the next 6 months rose to 82.5 in August from 81.1. We check markets for you all day long at Bloomberg. The S&P 500 now up 0.2% or 10 points. NASDAQ up 0.2% or 38 points. And the Dow is down 8 points. It's a little changed on the downside. Eli Lilly now selling vials of its blockbuster weight loss drug Zepbound to patients for as little as $3.99 a month as it's working to overcome supply shortages. Patients with a prescription for Zepbound can purchase a month's supply of single-use vials through Lilly's direct-to-consumer site starting today. Those vials are priced at about half what shots would cost. Zepbound is typically sold in an auto-injector pen. Shares of Eli Lilly are up 0.4%. And affordable housing still out of reach for many American families. And it's an issue in this year's elections. CoreLogic reports U.S. home price nationwide rising 5.4% in June on a year-over-year basis. That's faster than the 2.9% U.S. inflation rate, as tracked by the government's Consumer Price Index. And that is a Bloomberg Business Flash. Now back to Balance of Power with Kaylee Lines.
All right, Amy Morris, thank you so much. Taking a look at the markets for us on this Tuesday. And as I've been reminding everyone, I am counting 70 days until the election. 10 weeks from today is when voters will head to the polls. And while we spend a lot of our time and energy talking about potential voter selection for president between Donald Trump and Kamala Harris, it is worth noting that depending on the state where they live, they will have a number of congressional candidates to consider as well as they go to cast their vote, whether or not they'll be splitting their ballots, voting R or D all the way down. It is the composition of Congress we have to consider as well, because whoever is elected president will only have so much ability to accomplish their own agenda if they don't have congressional support. And that is where we go now to Erin Covey, who is from the Cook Political Report. I'm sure she's an editor, and she does focus specifically on congressional races. Erin, welcome back to Bloomberg TV and radio. Always great to have you here on Balance of Power. Just a few minutes ago, I was speaking with Jim Kessler of Third Way, who said that the chances of a sweep for Democrats are higher today than they were 5 weeks ago when Joe Biden was still in the race. But higher is one thing. Higher to the point that it actually seems likely is entirely another. How have the last 5 weeks and the sudden energy and exuberance that has come along with the Kamala Harris presidential campaign changed your own calculus about the way in which the balance of power in Congress is likely to switch up come November?
Hi, Kaylee. Well, thanks for having me on. So Harris's entrance into the race has reset it, not just for the presidential race, as you mentioned, but for the down ballot races as well. And I think it has had a much larger effect on the battle for control of the House, where Republicans only have a 4-seat majority. And so all cycle, I think the House has kind of looked like the best area for Democrats to succeed in compared to the presidential race, where Biden was trailing Trump for most of the cycle at the top of the ticket, and the Senate, which is where the map currently is very good for Republicans this cycle. And so even now, I think with Harris at the top of the ticket, Democrats would need to hold seats in Montana and Ohio, which are states that Trump is still very likely to win by single or double digits this year. And so the Senate, I think, remains difficult for Democrats for that reason, just because of the map. But the House is a lot more feasible at this point. You know, I saw in polling, even before Biden's disastrous debate performance, he was a huge anchor on House Democrats. And, a lot of these House candidates were overperforming Biden pretty significantly. But it's very difficult at the end of the day for a House candidate to separate themselves from the top of the ticket, as they're so tied to the national environment. In 2020, we only saw 16 congressional districts that voted one way for president and the other way for Congress. And so Biden could have made it incredibly difficult for Democrats to take control of the House. Now with Harris at the top of the ticket, they're in a much stronger position. We still see control of the House to be close. I think if you look at the races in our toss-up column, you'll see that neither party has a clear edge, and it looks like it's going to come down to the 24 or so races that we consider pure toss-ups. But Democrats now have a much better shot at winning those toss-up races and gaining a majority.
Well, and let's talk about where those toss-up races are actually concentrated, because we know a lot of them are in states like New York, for example, which is a safely blue state when it comes to the presidential election, but not so when it comes to the many different districts that are in the Empire State. So how should we be thinking about that kind of dynamic, Aaron, knowing that the presidential candidates themselves are focusing a lot of their time, energy, and frankly, resources into the swing states that will decide the Electoral College? We're not necessarily going to see Harris or Trump frequently visiting New York, right? And how does that affect the candidates that are running there?
Yeah, so you're right, Kaylee. It's an interesting dynamic. The reason that you have a lot of competitive races in states like New York, California, Oregon, New Mexico is because of the fact that Republicans did pretty well in these states during the midterm cycle, whereas Democrats did surprisingly well in a lot of the swing states like Michigan and Pennsylvania. Republicans made pretty significant gains in states like California and New York. And so because of that, now Republicans have several vulnerable incumbents who are in these states. And because of the fact that you don't have the presidential candidates fighting the battleground on that territory, I think that Republican incumbents are in a slightly better position to separate themselves from the top of the tickets in some ways. But at the end of the day, all of these races have become so nationalized. I think it's going to be difficult whether you're a Republican member in California or a Republican member in Michigan to distance yourselves from the national dynamics. They'll certainly try to do so. And then on the other hand, most of the Democratic incumbents who are most vulnerable are actually in some of the more competitive states. So that includes Pennsylvania, Michigan, Arizona, North Carolina. These are the states that have the most competitive districts that Democrats currently hold. And so, you know, it's a weird geographic divide here. I think that it could have a marginal impact maybe on Republicans' ability to hold the House, which could matter if control of the House is decided on the margins, which we think it will be. But I do think at the end of the day, it is very difficult as a member of the House and certainly as a House candidate to separate yourselves from the national environment and from the top of the ticket.
Well, I want to talk about the Senate as well, and I know you touched on it in your first answer, Aaron, this idea that it still is going to be incredibly difficult from a map perspective for Democrats to keep control of the Senate, given the vulnerability of Senator Sherrod Brown in Ohio and Jon Tester in Montana. But how do you think their odds have changed with now Harris at the top of the ticket? Do they have a greater likelihood of holding on to their seats, or if there is any way for the Democrats to keep hold of the Senate, do you think it's likely going to require them flipping a seat that right now isn't actually seen, at least in the prevailing thought, as easily flippable, like in Florida or Texas?
Yeah, so I think it is true that Harris has had a positive effect on almost all of these down ballot races across the country because she has injected new energy into these Democratic base voters. And there was a question when Biden was at the top of the ticket about whether a lot of these Democratic voters would even turn out. It wasn't a question of whether they were going to vote for Trump, but it was a question of whether they were going to vote at all, which of course had a trickle-down effect on the Senate races and the House races as well. So yes, I do think she has maybe given Democrats a slightly better chance in Ohio and in Montana, but these are both still very difficult states for them. You know, I think they certainly have a better chance in Ohio, I would say. We have both of these states rated as toss-up races, but I think Ohio, just at a fundamental level, this is a state that Trump won by about 8 points in 2020 and 2016, whereas Montana, Trump won this state by double digits in the teens for the last couple of cycles. Yeah. So just in terms of the fundamentals of these states, Republicans have a slightly better chance in Montana. But then if you're looking at the rest of the map, you're right. They do have potential offensive opportunities in Texas and in Florida. Now, you know, these are both states that we expect Trump to win. Trump only won them by single digits in 2020, but by about mid-single digits. And so I would be surprised if Harris managed to win either. I think they're going to be closer. And I think in 2022, we saw Republicans do really well in Texas and Florida. I think it's going to be more similar to 2020. But that still might not be enough for these Democratic Senate candidates to unseat Republican incumbents. So in Texas, you have Ted Cruz, who is up for re-election. And obviously, we all remember in 2018, the Democratic nominee there, Beto O'Rourke, only came a couple of points away from unseating him. But that was in a cycle that was uniquely good for Democrats. And we're going to have a much more even environment this time. And so that makes the Democratic nominee, Colin Allred's task a little bit harder. And then in Florida, this is a state that used to be quite competitive at the federal level, not in presidential races, but has moved towards Republicans pretty dramatically over the last couple of cycles. So, I think probably this is still a state that we're going to see Trump winning by single digits. I don't think we're going to see him carrying Florida by double digits, certainly, and especially now with Harris at the top of the ticket. But that is going to make it difficult for the Democratic nominee there to outperform Harris.
All right, Aaron, and finally, before we let you go, this is some other news that I think took some of us aback today, but maybe won't be that surprising to you, I'm not sure. Trump's transition team, according to the campaign, is going to be co-chaired by two former Democrats, Robert F. Kennedy Jr., who of course just suspended his presidential campaign, and former Democratic Congresswoman Tulsi Gabbard. Are you surprised by this, or should we not actually be considering these people as former Democrats because they are so now far removed from where the party finds itself today?
Yeah, it's a good question. I think Tulsi Gabbard, obviously, she ran for the Democratic presidential nomination 2020 and used to be a Democratic congresswoman. But I think she has moved pretty consistently to the right over the past couple of years. And I'm not sure that her involvement with his campaign is going to have a significant impact, though, it could have a marginal impact with undecided voters. I think we've seen the number of undecided voters has certainly shrunk since Harris got in the race. Before what we were seeing was that Trump was performing about steady, but Biden's numbers were dropping. Now we see that Harris has kind of consolidated Democratic support and Democratic-leaning independent support. And so now the number of undecided voters who might vote for some of these third-party candidates who are still on the ballot, that number has shrunk. So they're both candidates are fighting over a pretty small group of voters at this point. So who knows? Maybe Gabbard and RFK's involvement in Trump's campaign could sway enough voters to make a key difference in the battleground states. But I don't think it's going to have ultimately a huge impact on the contours of this race.
All right, Aaron Covey of the Cook Political Report. Always great to get your analysis. Thank you so much. Appreciate your insight into the down ballot races we should be watching. And I would point out that we are still in the middle of primary season that will decide ultimately who the final general election candidates are in a number of these states, including next week after Labor Day. On September 3rd, the Senate and House primaries take place in Massachusetts. And for our listeners in Massachusetts and all of New England here on Bloomberg Radio, starting on September 3rd, how convenient, you can listen to Bloomberg Radio in and around Boston on our new signal 92.9 FM. It's your news source for business news from the financial center of New England. Of course, we'll on Balance of Power have all the politics news, including the results of those primaries, covered for you as well. Again, Bloomberg Radio is moving to 92.9 FM at noon on the day after Labor Day. It also, of course, is the new signal that you'll find Bloomberg Business Week on, which is just ahead here on Bloomberg Radio and television. Tim Stenovic and Carol Masser will be hosting that today. Guys, what do you have coming up on the program?
We're going to take a little bit of a look when it comes to the financial markets. I feel like we're in this interesting point as we wait for that Fed decision next month. We've got some economic news, but the valuation in terms of stocks versus bond, our Gina Martin Adams is going to be along in just a moment.
We also are just thinking about NVIDIA earnings tomorrow. I know the market is just waiting. Investors are waiting with bated breath for that, Kaylee. Also, we're going to talk a little bit about Zepbound and why Eli Lilly is selling its blockbuster weight loss at a discount. Really interesting implications there.
And you know what's really cool? The Kelsey brothers signing a mega deal with Amazon.
$100 million.
Which makes me wonder.
That is pretty crazy.
If Taylor hadn't come along, do you think they'd be signing this deal?
I want to say no, Carol. I feel like the Taylor, or maybe they would have been signing the deal, but we wouldn't be talking about $100 million. Maybe a smaller figure than that. I feel like that's the Swift effect.
Yeah,
right there.
Absolutely. So yeah, we got a lot going on. We're also going to get a look at the consumer credit picture. I do feel like we had some consumer sentiment numbers today, Kelly, and so we've got the CEO of VantageScore who's going to give us an idea of how consumers are really doing, what we're seeing in terms of delinquencies, the type of debt they have, and all that good stuff.
Yeah, and of course that has a read through to the election as well, as how consumers are feeling about the economy is very likely to influence how they're actually going to be voting. That's something we'll continue to talk about here on Balance of Power. Looking forward to the show, guys. Bloomberg Business Week is straight ahead with Carol and Tim. You can find full coverage of those stories and more over the course of the next several hours. And of course, you can find me back here on Bloomberg TV and radio in the late edition of Balance of Power. Coming up at 5 p.m. Eastern Time, I'll be joined by Democratic Congressman Madeline Dean on the program, as well as former astronaut Leroy Chow, as we take a look at space and those astronauts still trying to make it back from the International Space Station. So I'll see you guys later. In the meantime, Bloomberg Business Week is straight ahead on Bloomberg TV and radio.
is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
And a very good afternoon, everybody, live on radio, TV, YouTube, Bloomberg Originals. This is Bloomberg Business Week. I'm Carol Masser along with Tim Stenevec. Let's get to the setup. at this hour. And you've got the S&P 500 pretty much, Tim, hovering around its all-time high. I go away and we get another record?
Yeah,
What's
but
up
I mean,
with that?
well, what's up with that is everybody's just waiting for what happens, with NVIDIA tomorrow. So it's kind of taking a step back.
So
I
should
like
we
how
just
you
go
did
home?
add some.
Should we just go home and
I
wait
like
for
how you added
NVIDIA?
some drama to today's trade, where there's actually little to no drama. I think it's fair to say.
I got to tell you, I got on the subway platform this morning. There was nobody there.
Oh, not my train.
Nobody. Oh, you were busy.
Yeah, I think it was just running slowly. So yeah, and there were people waiting.
All right, everybody's waiting, I know, for us to get started, so we're going to get into it. Tim mentioned NVIDIA. We're going to get more on the equity trade in just a moment, and specifically, we're going to dig into some great research by our own Bloomberg Intelligence, Gina Martin-Adams. She talks and asks why reasonable alternatives still look better than stocks. So we're talking about valuations. We're going to dig deep on this one.
All right, plus, what's going on with these weight loss drugs and the companies behind them? Zepbound is on sale. We're going to explain why Eli Lilly is selling its blockbuster weight loss drug at a discount.
Is this like buy one, get one free, BOGO?
We'll have to find out from Madison Muller in just a minute.
We will indeed. Plus, the CEO of Vantage Score on the consumer credit picture. We're going to look into that.
And then, how about $100 million for a podcast?
Sign me up.
Yeah? That's on top of your football salary.
Oh, yeah, there is that too.
Okay, the Kelsey brothers.
Oh, wait, and on top of Taylor Swift.
I don't know. I mean, like, what else,
It's just layer.
They have their own identities, Carol, okay?
Do they really?
Yeah, they do.
All right, lots to come over the next 60 minutes. First up, let's get a check on the day's top business stories. Here is Amy Morris.
All right, thank you, Carol. Stocks are mixed, not a lot of movement, as traders are waiting for, you said it, the big market-moving event of the week to market, too. NVIDIA shares right now about 2% higher. We check markets for you all day long here at Bloomberg. The S&P 500 up 0.2% or 13 points. NASDAQ up 0.3% or 61 points. The Dow is down, little changed on the downside, only about 11 points. The 10-year Treasury yield at 3.82% and the 2-year yield at 3.9%. And struggling with plunging demand for its COVID products, Pfizer has a new plan to reach potential customers, cutting out the middleman, selling drugs straight to patients. The company launched its website today called Pfizer for All, allowing users to schedule vaccine appointments or meet virtually with doctors who can prescribe its medicines for COVID, migraine, and other conditions. Then they ship them straight to your door. Shares of Pfizer now down about 1%. And Eli Lilly selling vials of its blockbuster weight loss drug Zepbound to patients for as little as $3.99 a month. It's trying to overcome supply shortages. Patients with a prescription can purchase a month's supply of single-use vials through Lilly's new direct-to-consumer site. That started today. The vials are about half what shots would cost. Zepbound is usually sold in an auto-injector pen, and shares of Eli Lilly are about 0.5% higher now. That's a Bloomberg Business Flash. Now back to Bloomberg Business Week with Carol Masser and Tim Stenovec.
All right, much appreciated, Amy Moore. So as we await tick-tock, everybody, NVIDIA's earnings after tomorrow's close, what they say about spending on AI, we have stocks hovering around their all-time highs, Tim, and with questions swirling around Fed policy, the state of the economy, and the U.S. presidential race, at least one thing seems clear on Wall Street, spending on A is really still key.
Yeah, concerns about the returns of those investments recently contributing to a tech sell-off, though, although that dip was readily bought. We got with us Bloomberg Intelligence Chief Equity Strategist Gina Martin.
As somewhat problematic because it does mean that there are reasonable alternatives to stocks now. You can get a reasonable yield out of the bond market, 500 earnings yield, and that's a very big difference relative to the last 10 years. But when you look at the long run, is it really that bad? Well, it historically means when you sit at about average equity risk premium, it historically means you get average returns. So average returns in the equity market, is that a horrible thing? I'm not so sure.
Interesting. So, I mean, so how do you look at, we got hit a record yesterday, we're hovering near these records. Does it mean that we kind of stay where we are in terms of levels, or can we go higher from here?
Necessarily the key determinant of short-term returns in the equity market by any stretch of the imagination. In the short term, I think there are a lot of things to watch for catalysts. Power behind this equity market advance. Since July's peak in the equity market, we've seen the Magnificent Seven stocks struggle relative to the rest of the market. You mentioned NVIDIA coming out tomorrow. The importance of the Mag 7 is deteriorating as we're seeing a broadening earnings cycle emerge. The rest of the index is finally starting to contribute to fundamental growth, and that's creating a little bit of price optimism that is helping to power the index higher. for the first time in a long time, the Mag 7 actually made a new high before the broader S&P 500. And we think that that's a signal of some internal rotation that is certainly something to watch for whether or not the market can make new highs later this year as well.
Gina, how do you see the environment in terms of the Fed easing? Why do you think the Fed is going to ease on rates?
Yeah, I think a lot of it is really preemptive. I think they're seeing finally inflation is back to a point where they feel a little bit more comfortable that it's contained, at least in the short run. And at the same time, they're seeing some minor weakening in the job market. But we have not yet seen average monthly job losses, which is usually what's required for them to get a bit more panicky in terms of policy. So I think so far, and I believe this is also the equity market's interpretation, is that the Fed is easing to try to prevent that growth downdraft from coming. At the same time, they're easing to try to normalize policy with where we are in their dual mandate of watching growth as well as inflation conditions. And inflation, without a doubt, has decelerated materially back to a level that the Fed is more historically comfortable with.
You know, it's funny. I just feel like I'm like this barbell of like watching what's going to happen with NVIDIA tomorrow. And then I'm also continuing to think about small caps. I want to go back to NVIDIA for a second. How do you think, or could it possibly, depending on what we get, Gina, tomorrow from NVIDIA, if it's a big beat or a big miss, how that might change sentiment as well as the actual trade, the equity trade?
Yeah. Well, I think that there's one really important missing component of the analysis on NVIDIA that's out there, and that is NVIDIA's impact on the market is actually diminishing over time this year. This is very different than the environment that we had in 2023. And we know this because the correlation between NVIDIA stock and the S&P 500 actually fell markedly in the downdraft in July and early August. This is very different than the 10% correction we had in 2023, where NVIDIA's downdraft in that year was very closely correlated to the market downdraft. So there's a very different, broader market climate today. NVIDIA does still have, it's still the poster child, and it does still have a very strong impact on the AI theme stocks, on the Mag 7 at large, and on the tech sector. So when we watch NVIDIA, we watch for its impact there. But it is no longer, frankly, the arbiter of everything for the S&P 500. That's been a diminishing correlation throughout this year that I think has kind of gone unmissed by most commentators on the market. So it is very, very important for tech. And it will certainly either make or break some of the trends regarding AI. But it's no longer the most meaningful sort of driver of the overall S&P 500. That is slowly shifting to the Mag 7 stocks. They're taking on that responsibility as their earnings growth recovers and as investors start to pick away at some opportunities in that underloved group.
Do you also see opportunities in small caps, which are definitely lagging overall this year? If I look at the Russell up about 9% year to date, you've got the S&P 500 up about double that amount, 18%. It's a little bit lower today. Are there still opportunities in small caps to be had?
Yeah, for sure. And especially if the Fed does ease and that easing only prevents a significant growth slowdown from coming or helps to mitigate the impacts of a growth slowdown. But I do think that the process for small caps could be a little bit slower. We're just getting to the point where investors are starting to put capital to work in the biggest of the big companies outside of tech. Eventually, we'll get to the point where small caps start to perform a little bit better as well. But it takes a period of time in which investors can gather confidence that the economy is finally starting to post a recovery. I think it's really important to consider the fact that small caps peaked all the way back in 2021, have really struggled to surpass those former peaks in an environment where the economy has been constantly under fire, constantly under question. Really, since late 2021, we've been talking about this impending doom from the economy, and that's been a tremendous sentiment drag on small caps.
Right.
But if we can get past that sort of lack of economic confidence with a Fed ease, with some final bottoming in some economic numbers and some recovery into 2025, small caps can absolutely do better. The other thing I'd say to watch with small caps really is financials. Small caps are a more financials heavy index than the large cap index is, and we're already starting to see very strong positive signs coming out of the S&P 500 financial sector anyway, with much better earnings growth and also stronger price performance emerging. That should eventually start to help small caps as well.
Great stuff, as always. Gina Martin-Adams, Chief Equity Strategist at Bloomberg Intelligence there in New Jersey. All right, that is our macro equity market trade and analysis, and also what might get, what happens with NVIDIA and its impact. So let's also get to what? A most read story on the Bloomberg.
Yeah, it's about how Eli Lilly is now selling vials of its blockbuster weight loss drug Zepbound to patients for as little as $399 a month. This as it works to overcome supply shortages of its wildly popular shots. Here to explain on the GLP-1 beat is Bloomberg News health reporter Madison Muller. She's here in our studio. What's going on here? Because this is a different delivery mechanism, at least initially.
Feels do-it-yourself.
Yeah, a little too DIY for my liking. Let's just say that. Patients are going to be required to fill up their shots themselves with these vials?
Yeah, so patients take a syringe, put it into the vial, and you sort of draw up the liquid into the vial, which a lot of people, though, are used to now because of the popularity of these knockoff drugs that we've talked about before. Those are all the single-use vials or the multi-use vials, and so patients are really used to that now.
So why, I mean, does Lilly have to do this, or why are they doing it? What's strategy here?
So this is, and I think we've probably talked about this on the show at some point too, the fact that Lilly's production problems are really stemming from the pens, the auto-injector devices that are used are really complex to manufacture, and so that's been bottlenecking supply. So by offering their weight loss drugs in vials, they can circumvent those issues with the making of the pens.
What about the direct-to-consumer angle here? Because I don't think I've ever been able to get a prescription directly from a manufacturer. There's always a middle person as a pharmacy, whether it's an online pharmacy or the old-fashioned kind of pharmacy that you'd go to. Is this a new way for patients to actually get a medication from a producer?
Yeah, it's interesting because Lilly Direct, which they launched earlier this year, it's still partnered with various telehealth companies and online pharmacies that, like Amazon Pharmacy, for example, that will just send the medications directly to your house. So Lilly isn't the one, like it's not Eli Lilly doctors that are writing the prescriptions. It's not an independent Eli Lilly pharmacy, but they've built up this platform that directs patients to their website. They said that can help, with savings in terms of applying savings coupons and things like that. And then when it comes to these vials, they have, it's cash pay only. So patients are not able to use insurance with these vials. And it also goes through Lilly Direct.
What is demand for this drug outside of insurance?
I mean, people are really paying for this drug.
So up to $1,000 a month if you don't have insurance,
exactly.
But these are, $400 a month.
Have you been to a pharmacy on the east side or the upper west side lately?
No.
Yeah,
why?
I mean,
why? What do you see?
I'm just saying.
Yeah.
It's a pretty popular drug of people who just want to lose weight.
Right. Huh. And all these compounding drugs that have gotten so popular that we've mentioned, those are all cash pay. You can't use insurance for those drugs. So that market's really been growing.
You bring up an interesting point, though, which is, a little bit niche because it's so expensive. I mean, we're talking Manhattan here.
Correct.
Absolutely. And it's not necessarily, what the drug was developed for, Madison, as you've spoken to us at length over the past couple of years about this. But are there folks out there who are not getting this covered by insurance, a significant number of them, and they're having to pay cash?
Yeah, I mean, the insurance coverage is still quite spotty across the U.S. And for people who do figure out, okay, this is worth it for me, I need this for my health, they make those decisions. But it's still really hard to get this covered, and that was one of the reasons why Lilly is launching these vials, especially, they said, for Medicare patients, because Medicare does not cover weight loss drugs at all. And so they said, and Medicare patients also can't access savings coupons that Lilly offers. So they were like, having these vials options is something for Medicare patients that is at least a little more accessible.
It sounds like to me, too, Madison, that it's something that's going to help Eli Lilly's bottom line, which has gotten, messed up because of the problems with the production of the injector pens. But at the same time, it does sound like it's still expensive, but does make it a little bit more accessible to folks.
Yes, it definitely makes it more accessible. And from a couple of the patients that I talked to this morning, they were really excited about this. Yeah. One of the patients that I've interviewed before who kind of started this whole campaign earlier this year called Release the Vials to get Lilly to do this, he was so excited about it, and he was like, I really thought that they never would actually do this, or at least they would launch the vials and they would still be exorbitantly expensive. And so he was like, to me, this comes off as a good thing. The thing is, though, just reading through some of the analyst notes and in conversations today after this news came out, for Lilly, it doesn't really affect the net prices in the long term, even though it seems like a discount. But they've also raised the price of one of their savings coupons, so that kind of offsets each other. And in terms of like the revenues that Lilly is collecting from Zepbound, doing this doesn't actually have a negative impact on their bottom line.
Doesn't have a negative.
Doesn't, yeah.
Yeah.
Okay, we've been talking about the popularity of the GLP-1 class of weight loss drugs. Do you have any sort of third-party data, or is there any sort of estimate out there that actually pinpoints the percentage of Americans, the number of Americans who are taking one of these drugs right now?
I mean, we know it's in the millions. It's been a little bit hard. There's been some estimates. I think it was like 3 million or 4 million a couple of months ago was the most recent that I saw. And it's, I mean, I can imagine only gone up since then. And then you add in all of the people that are taking these knockoff drugs, and there's no way to really track that. So that's a whole other portion of the population that we don't really know how many people exactly are on those, but we know just from sort of piecing it together ourselves that it's likely hundreds of thousands.
You know, we had another story that's out on the Bloomberg about Pfizer following Lilly with a site selling directly to patients. Are we going to increasingly see this?
It seems like that's what I'm hearing from people in the industry, that this is a trend that after Lilly launched Lilly Direct last year, more and more pharmaceutical companies were like, this is an interesting option, and this is something, it doesn't work for all drugs, obviously, but for something like migraine drugs, which Pfizer has and which is going to be part of their direct-to-consumer platform, it makes sense for patients who are already sort of Googling, you know, is migraine drugs right for me? And then they can go to Pfizer's website and learn about it and sort of like be connected to doctors there.
Not so great for the pharmacy benefit managers and the large traditional pharmacies.
Yeah, I mean, it doesn't cut them out entirely. Like, the middlemen still exist. And like I said, Lilly is partnered with, and Pfizer as well, partnered with these third-party pharmacies and telehealth companies. So it's not cutting them out entirely. It's circumventing them and not really going through these traditional channels. So it's like, it is interesting, and we don't know yet how this will change the traditional model.
It's like poking at the model a little bit.
Yeah.
We'll see where it goes. Thank you so much. Always,
Thank you.
always. Madison Muller, she's health reporter at Bloomberg News. Check her out, too, on Twitter at Going Mad.
You should read that
She's
a couple
Madison.
times.
Exactly. Good stuff, always. Thanks, Madison. Coming up next, now showing the Paramount saga coming to an end.
I don't know about that. We'll see.
There could be a sequel.
I'll believe it when I see it.
A prequel, a
Yeah.
sequel. And then, of course, we're going to talk about the Kelsey brothers ending up with a pretty big deal over at Amazon. That's more to come on the other side.
It's 2:21 on Wall Street. I'm Amy Morris. Supermicro computer shares are down about 3% after Hindenburg Research said it's short the maker of server equipment. The stock fell as much as 8.7% after Hindenburg wrote that an investigation into the company revealed glaring accounting red flags, evidence of undisclosed related party transactions, sanctions and export control failures, and customer issues. Supermicro did not immediately respond to a request for comment. American consumers felt more confident in August as their outlook for the future improved. The Conference Board says its consumer confidence index rose to 103.3 in August from 101.9 in July. The median estimate in a Bloomberg survey of economists called for a reading of 100.7. Traders are waiting for tomorrow's NVIDIA earnings, so not a lot of movement as we check the markets all day long for you here at Bloomberg. The S&P 500 up 11 points, NASDAQ up 43 points, the Dow is up 4 points. The 10-year Treasury yield at 3.82% and the 2-year at 3.9%. That's your Bloomberg Business Flash. Now back to Bloomberg Business Week with Carol Masser and Tim Stenivek.
All right, Amy Morris, thank you so much. All right, folks, now to one of the most read stories on the Bloomberg. We've been having some fun with this. It's about the Kelsey brothers, you know, Travis and Jason signing a big podcast deal with Amazon.
For that story, back with us is Bloomberg News music and audio reporter Ashley Carmen. She joins us in New York City. Okay, Ashley, it seemed like just a few days ago you were on our program talking about another huge podcast deal, SiriusXM and the Call Me Daddy podcast. What do you know about this latest?
Call Me Daddy?
Yeah, I don't think you weren't here that day.
All right.
You're not a listener?
Sorry. Not that day.
Or Call Her Dad? What is it? I don't know.
What is it?
Call her daddy.
Call Her Daddies.
All right. I'll
sorry.
check that out later.
Yeah, I don't even know.
I digress.
All right, let's get back on track.
We do
here.
know about the Kelsey
brothers. What is their podcast?
It's called New Heights. It started in 2022. It was basically, you know, the brothers talking about football culture. And then things really took a turn for the better when Travis began dating Taylor Swift. And now they still talk about football, but it's sort of expanded its audience and its remit to really cover kind of culture more generally too.
How big a deal is this? Because we know there are some podcast deals that are done with some talent that are huge. It feels like a lot of money, 3 years, but put us, you know, this world in the context of the kind of deals that are out there. How big is this one?
More than $100 million for 3 years is still a very big deal, especially because the past year and a half or so in podcasting has really seen some of the smaller shows, the narrative shows, struggle to find budgets and audience. So the fact that these mega deals are still happening, granted for celebrities, is still a pretty big deal. Yeah.
Do these mega deals work though for the companies? I mean, we were talking about what happened out at Spotify when they were doling out big money in recent years to podcasters. Apart from Joe Rogan, investors didn't necessarily have the patience for that. Does this type of thing work for a company like Amazon's Wondery?
I think the way the business is changing now is in the past, the way these companies arrived at these valuations was essentially taking, you know, the amount of audience the show has and is projected to get, and then basically multiplying it by how much they charge for the ads against that audience. And now what companies are really thinking about, and as Amazon mentions in their press release about this, they're thinking about IP licensing opportunities for merch, for other items. They're thinking about live streams and live events. There's sort of this broader idea of like a media empire tied to the podcast rather than just the straight up ad sales for the video and audio.
All right. I don't want to diss the brothers. I think they're pretty cool. And I know they've had a following, but the Taylor effect, I mean, has really juiced them in a big way. I mean, if she hadn't come along, do you think we'd be talking about a 3-year, $100 million deal?
We'd still be talking about a 3-year, $100 million deal. I think the question is, did dating Taylor Swift sort of put the podcast in another echelon as far as people paying attention to it? And it significantly did grow the audience. I spoke to the chief content officer at Wave Sports and Entertainment who used to produce that show. And he told me that when Taylor went to her first Kansas City Chiefs game, the show had a 50% increase in viewership. And then a month later, the YouTube channel had grown by 350,000 subscribers. So it really helped the show take off more than it already had been.
Do you think Taylor would come on our show and maybe just talk to us about, like, I don't know, when we talk climate change or something?
I have not reached out to her people, Carol.
Have you?
I have not reached out to her people.
Okay.
But we'll do that, and I'll get back to you.
Just one little
Yeah,
something.
just a little bit.
That's all we need.
Is the industry getting a little saturated with the celebrity big banner podcasts, Ashley?
I think it certainly was saturated during the pandemic when every celebrity was home and looking for work. Now I think a lot of the shows that started up around that time have essentially ended. And you do have some folks, I mean, it's not easy to have a podcast. You guys are, as radio hosts and podcast hosts, it's a full-time job. It takes a lot of dedication to do this work, even if people make it seem easy. So celebrities who are just in it for maybe a paycheck or for one season, they're not doing it anymore. These are now folks who are taking this seriously as a real career.
Yeah, I mean, I don't know. Like, I have one last question. Like, when you are doing a 3-year, $100 million deal, that's a lot of money. Like, what does a successful podcast bring in terms of revenues?
Well, I don't know what it brings in, but I would assume they want to make the money back and then some. But the idea is really that it's a place for them to sell the ads and then, of course, bring audience to their other shows as well.
Yeah, just...
Wait, I have one more question.
Go ahead.
Can I do this?
You can do whatever you want. This
I
is
think
your show, too.
I do think there is some confusion with Wondery and the relationship that Wondery has with Amazon and for people who have Amazon Prime. Like, this is not one of those services that makes Amazon Prime more valuable. Wondery is a separate add-on still to Amazon, no?
Wondery is owned by Amazon, technically Amazon Music. So it's part of the Amazon empire, but they do have their own separate app that's a subscription app called Wondery Plus. So they operate a little bit, I guess, separately in that way.
I see. Yeah, see, this stuff, for the consumer part of it, Carol.
Yeah. What?
Even with the SiriusXM deal, the separate app, the bundling that we talked about last week, you were not here, but... there's a consumer learning curve, too, I think, to finding this stuff.
I agree, and, like, understanding the connections, right? And I agree, when I go for a podcast, sometimes I just, like, search generally, and I kind of don't care where it shows up, but I don't know. It's interesting stuff. Anyway, it sounds like it's good to be one of the Kelsey brothers on this, what day is it? Tuesday, yeah.
You can get our podcast at Bloomberg.com, Apple, Spotify, or wherever you get your podcasts.
For now, we're available.
Yeah.
All right, we're going to run. Ashley, thanks so much. Ashley Carmen, music and audio reporter at Bloomberg News, joining us from New York City. Actually, our podcast is really good. A lot of people.
so says 50% of the podcast. It's good to have confidence. It's good to have confidence. Yeah.
Sources say.
Yeah, sources say.
All right.
You know what sources also say?
That Seagram is out.
Yeah, Siegman heir Edgar Bronfman Jr., he's dropped out of a bidding war for Paramount Global after submitting a $6 billion proposal for the company last week and challenging an offer of more than $8 billion from Skydance Media. With the latest twist and turn, back with us is Bloomberg News entertainment editor Chris Palmieri out there in our LA bureau. That was quick, Chris.
What happened?
Yeah. Well, he just couldn't get the financing together ultimately. If you think about what happened here, he got a late start. He really really looking at it in March. It's telling that there weren't a whole lot of big private equity firms, the Apollos and Bain, who was originally looking at partnering with Edgar, did not participate. So he had to cobble together a lot of wealthy individuals, and there were dozens of names listed, and to get them all to sign off on all the required documentation, regulatory stuff. He just couldn't put it all together by Wednesday.
So just a timing issue? So if someone had come back and said, you got another month, go figure it out, would this deal be still in the works, or did he also get cold feet, perhaps?
I got the sense from his people that it really was just he couldn't get the financing together. I think if it was up to him and he could have written that $6 billion check, he would have. But, he didn't, even he doesn't have that kind of money.
So is the story finally over, Chris?
Can the credits roll?
I think I've been writing about this company for 12 years, so I don't think so. I think we've got, potentially, regulatory approvals coming. I'm almost certainly going to have lawsuits regarding the deal. No, it's not over.
It is. You joke about writing about this company for 12 years, but the Paramount Global that you write about today is such a different company than you were writing about 12 years ago. There was the Viacom CBS drama, the spinoffs, the marriage back together. What is it today that it wasn't 12 years ago? Or what was it 12 years ago that it isn't today?
It was a much more powerful force in the media business. I mean, CBS was the envy of the broadcast world for sure. The cable networks, MTV, Nickelodeon, were ruling the world. So it's just an entirely different business today, as we've talked about before. The traditional TV channels, people are losing viewers, advertisers, and in some cases, the companies are doing it to themselves. They're putting some of their best shows, exclusively on their streaming services, giving people a reason to switch. At the same time, they're asking for higher fees from the cable and satellite distributors into raising the prices to consumers. So it's just a mess. It hasn't sorted itself out, and Paramount is sort of exhibit A of what's gone wrong with the business.
We do see Paramount shares down almost 6% in today's trade on this news. Having said that, so this is it. We just move forward. Skydance gets it. And what should we assume that deal closes in the next couple of months, or what's the
first half of 2025 is what they said. I mean, the one bright spot is this is essentially being financed by one of the richest people in the world, Larry Ellison, and so to the extent that things get worse, shareholders could maybe anticipate some more money coming in, but Paramount still has a lot of debt in a business that's struggling.
Chris, what I always find interesting is that, as much as we talk about some of the struggles of the media world, I mean, we live it, work it, breathe it, and see the changes, the innovation, the disruptions. We were just talking about podcasts. I mean, we've got a show right now that's on TV, it's on radio, it's on YouTube, which has become increasingly, super popular. We put a podcast out. There are still investors who are super interested in media properties. And what is the value today? Is it the content? Is it the distribution? What is it?
Well, I wouldn't discount the glamour. Nobody will admit that, but it's a lot of fun to go to premieres and hang out with celebrities and to some degree influence popular culture. But there's more to it than that. I mean, there is a business. The TV industry is going through a transition, sort of like what the music industry did, where album sales and CD sales disappeared, and eventually streaming made up for the difference there. It hasn't happened broadly in newspapers, but certainly there are individual newspapers like the New York Times and Wall Street Journal that have made the digital transition. Mm-hmm. Inevitably, TV will. I mean, certainly Netflix has proved it.
Chris, you mentioned that the story's not over yet, at least this iteration of the story. I'm curious about the next thing that our audience needs to watch for and to understand when it comes to the progression of events here. We only have about 20 seconds left.
Well, the deal will get final approval and move on within
All right, Chris Palmieri out there in Los Angeles, covering all things entertainment and writing about CBS, Viacom, Paramount Global for the last dozen or so years, Carol. Maybe a dozen more in the next iteration.
Yeah, it's fascinating, though, like how long this one went on. As we said, their shares
of Paramount Global. This still feels like it's taken a dozen years.
I know, it's so true. All right, Chris Palmieri, thanks to you. Next up, we check out how the consumer is doing with the CEO of VantageScore. That's coming up on Business Week.
It's 2:40 on Wall Street. I'm Amy Morris. After a mixed and mostly flat day, we are starting to see some green on the screen as we check the markets for you all day long here at Bloomberg. S&P 500 up 11 points, NASDAQ up 44 points, and the Dow is up 5 points. The 10-year Treasury yield at 3.82% and the 2-year yield at 3.9%. Eli Lilly now selling vials of its blockbuster weight loss drug Zepbound to patients for as little as $3.99 a month as it works to overcome supply shortages. Patients with a prescription for Zepbound can purchase a month's supply of single-use vials through Lilly's direct-to-consumer site. That started today. The vials are priced at about half of what the shots cost, and Zepbound is typically sold in an auto-injector pen. Shares of Eli Lilly are 0.4% higher. Consumer confidence rose for a second month in August on more upbeat views of the economy and inflation. The Conference Board's gauge of sentiment increased to 103.3 from an upwardly revised 101.9 a month before. The median estimate in a Bloomberg survey of economists called for a reading of 100.7. And affordable housing still remains out of reach for a lot of American families. It is an issue in this year's elections. CoreLogic reports U.S. home price nationwide rose 5.4% in June on a year-over-year basis. That is faster than the 2.9% U.S. inflation rate, as tracked by the government's Consumer Price Index. And that is a Bloomberg Business Flash. Back to Bloomberg Business Week with Carol Masser and Tim Stenevec.
Gotcha. Amy, thank you so much. Amy Morris there in D.C. Hey, folks, we got a fresh read on the U.S. consumer this morning. U.S. consumer confidence rose to a 6-month high in the month of August as more upbeat views of the economy and inflation, Tim, offset waning optimism about the U.S. labor market.
Yeah, measure of expectations for the next 6 months rose to a one-year high of 82.5. That was in August. A gauge of present conditions actually edged up. For another take on the U.S. consumer, we welcome back with us Silvio Tavares, CEO of VantageScore. It's a joint venture of Experian, Equifax, and TransUnion. What they do is they provide credit data, credit risk modeling, and analytics. He joins us from San Francisco. Silvio, how are you?
Great to see you, Tim. Great to see you, Carol. Great to be on again.
Hey, how would you describe the consumer right now?
Well, the consumer has become cautious, and that's a market change in the most recent insights that we have for VantageScore credit gauge that we published this morning. The reality is delinquencies are up significantly, and also credit utilization is down. So consumers, if you look at the percentage of their available credit lines that they're using, that's at a 4-year low, dropped to 51.6% for the most recent period. And then if you look at it from the perspective of banks, banks have also become cautious. They reduced their new credit accounts in the most recent period of July across every single credit category: auto loans, personal loans, credit cards. And so the reality is that sets the stage for a Fed rate cut, because exactly what the Fed wanted to happen, a cooling in the economy, we see that perfectly crystal clear in the latest insights that we have.
Is this all manageable, or does it send to you some warning signs about the consumer really heading into some trouble?
Well, for sure, these are warning signs, particularly what we saw in July, which is really right across the board. If you look at credit utilization, that's at a 4-year low. The spike that we saw in late payments, what we call credit delinquencies, the spike June to July in credit delinquencies was the largest we've seen in 4 years. So the consumer is flashing some warning signs heading into September. And that's exactly why the Fed, as recently as yesterday and on Friday in Chairman Powell's speech, they're signaling they're gonna cut rates. And when we look back on this, what we're gonna say is this was the right time to do it.
So do you think that we'll see, or you in your world will see, an immediate reaction as a result of lower rates when it comes to the metrics that you look at, Silvio?
Yes, immediate is, depending on the time horizon you look at, but for sure there will be an impact this year. The challenge that the Fed has is not whether to decide whether to cut rates or not. They pretty much said they're going to cut in September. The question now is how much. If it's too much, they risk reigniting inflation. If it's too little, then of course that potentially means the economy will decelerate further and the economy could slide into recession. And so it's a real challenge to get that exactly right, particularly in the context where consumers actually right now are cautious, but as they look out over the next 6 to 12 months, you know, consumer confidence is quite high. We saw that in the data. Also, consumer credit health overall is actually still pretty good. The average Vantage score, credit score, 300 is low, 850 is high. Through the end of July, it was 702. So consumers are actually credit healthy and they have the ability to take on more debt. So I think it's going to come out that the Fed is probably going to cut by a quarter point and then see what happens and then wait till later on in the year to see if they need to do more.
Two things. I am curious because it sounds like a mixed bag of data that I'm hearing from you, or mixed tones in terms of, you know, credit utilization, as you said, fell to a new 4-year low. Credit delinquency spiking in July, highest month over month, jump in more than 4 years. Couple things. So is there a net takeaway about what it says about the consumer? Because it sounded like earlier you said that there are some worries and some concerns here, warning signs, I think you said in July. But I feel like there's also some things that aren't so bad. So I'm not quite sure what the takeaway is. And who are these consumers? This this latest survey, that you guys do, the credit gauge data, is it a cross-section of consumers? Can you give me some idea in terms of the demographics of who actually are in these surveys?
Right. And so these are not surveys. These are actual consumers' credit score, and it's across all Americans that have a credit report. So it's the most comprehensive data set that we have about credit
Tim,
health.
me, everybody in my control room, we're all in there.
You're all in there. We're all in there. And in fact, we score approximately 30 million more Americans than our next competitor. And so the signs, and this is what changed in July, the signs for the first time are actually consistent across the board. Credit utilization and the low number there shows that consumers are cautious and they think taking on additional loans is too expensive right now. So that shows the economy is slowing. When you look at delinquencies increasing, the most we've seen in 4 years, that's another sign that the consumer is cautious but actually hurting. It's a sign that the employment picture is deteriorating. And third data point, when you see banks reducing their lending, banks are obviously in the business of lending. When they reduce that, that means that banks are also cautious and concerned about the risk ahead. So all three warning signs shows very clearly the economy is slowing down, consumers are ratcheting back, and that's exactly what the Fed intended. That's why they kept rates as high as they did. And now it's time to take the foot off the brake and let the economy grow again. And that's what we're going to be doing in September.
Hey, Sylvia, we are all eyes on AI because of NVIDIA earnings tomorrow after the bell. I'm wondering
on AI, is that what you said?
AI.
Nicely done.
Thank you.
You're welcome.
How are you using AI at Vantage Score when it comes to consumer credit and determining credit scores?
Yeah, and so this is one of the areas that, you know, there's been not sufficient focus on. The reality is Vantage Score and credit scores are inherently an AI product. We use advanced machine learning to look at a consumer's credit report over time. We call that trended data, and we have an algorithm that spits out a 3-digit number. If it's low, you're not very credit worthy. If it's high, Vantage score 850, you are very credit worthy. And so it is the use of AI. But we do one thing which is very, very important. We always look at our algorithms and make sure that they are producing fair and equitable outcomes. And to do that, we include all of the best data. So we were, in fact, the first credit score to include rental data. Believe it or not, before us, nobody used rental data in the credit score calculation. We're also recently the newest score to actually use open bank account data, open banking data. We're the first to use that. And that enables us to have a really good read on how consumers are going to pay back their loans, and also including the maximum number of consumers to pay to have a credit score.
I do worry, though, if consumers are feeling a little squeezed and a little warning sign that if the Fed lowers rates, do people kind of start to ease up again and spend again because rates go down? I just wonder if that potentially creates some consumer problems going forward, which means we will have to check in with you again, Silvio. Good to check in. This time, Silvio Tavares, he's Chief Executive Officer of Advantage Score, joining us from San Francisco.
Hey, coming up in just a few minutes, it's one more thing here on Bloomberg Business Week. We're going to talk about the Miami Soccer Club expanding as FIFA's president follows Messi to the U.S. That's on the other side. This is Bloomberg.
Your company news headlines on Bloomberg Radio.
From Bloomberg in Washington, I'm Amy Morris. Investors are counting down to NVIDIA earnings after tomorrow's close of trading. The bar is high for the AI chip giant to show the spending boom still has some momentum. The AI chip giant, also the second most valuable company on the S&P 500, and its heady valuation could mean big swings for the market. Eli Lilly now selling vials of its blockbuster weight loss drug Zepbound to patients for as little as $3.99 a month as it works to overcome supply shortages. Patients with a prescription for Zepbound can purchase a month's supply of single-use vials through Lilly's direct-to-consumer site starting today. The vials are priced at about half of what shots would cost. Zepbound is typically sold in an auto-injector pen. Struggling with plunging demand for its COVID products, Pfizer has a new plan to reach potential customers, cut out the middleman and sell the drugs straight to the patients. The company launched its own website today called Pfizer for All, allowing users to schedule vaccine appointments or meet virtually with doctors who can prescribe its medicines for COVID, migraine, and other conditions. And and then ship the drugs directly to the patient's doorsteps. Brothers and NFL stars Travis and Jason Kelce have signed a 3-year deal with Amazon.com's Wondery for their podcast, New Heights. The arrangement goes into effect this month. New Heights launched in 2022 as an outlet for the brothers to analyze football and the culture surrounding the sport. Listenership took off after Travis started to date Taylor Swift. We knew this. Speaking on the New Heights podcast back in 2023, Kelce said he planned to steer clear of any conversation about his relationship.
Everything moving forward, I think me talking about sports and saying all right now will have to be kind of where I keep it.
New Heights was the 14th most popular podcast in the U.S. last quarter. And those are company stories we're following this hour. I'm Amy Morris, and this is Bloomberg.
This is Bloomberg Business Week with Carol Massar and Tim Stenevec on Bloomberg Radio and Television.
It is Bloomberg Business Week. And attention, New England viewers and listeners. Bloomberg 106.1 and 1330 are moving to 92.9 FM starting September 3rd. Listen to Bloomberg Radio in and around Boston on 92.9 FM. It is your news source for business news from the financial center of New England. It's Bloomberg Radio moving to 92.9 FM the day after Labor Day.
All right, good stuff. Speaking
Can you
of...
believe we're already there? End of the summer, day after Labor Day?
Who's the, Peanuts character? Isn't there a Peanuts character that's kind of bummed out all the time? Which one is it? Is it
Lucy?
Linus? Linus, right? Isn't Linus, always that's how I feel right now.
Okay.
Kind of bummed out?
All right.
Maybe? Was it
Sorry.
blanket? I don't know. Hey, speaking of moving, let's get to one more thing because soccer's powerful governing body is expanding in an upscale Miami enclave as its president relocates ahead of the 2026 World Cup, and the organization ramps up permanent staffing in South Florida. Now to the moving part.
Yeah, FIFA leased an additional floor in a Coral Gables office tower and intends to keep the space as a base for the Americas after the tournament, said people familiar with the plans. The president is moving to the Miami area as well, where he will be based through the World Cup, the people said, asking not to be named because the matter is private.
All right, it is. FIFA, man, gearing up in a big way for that 2026 World Cup. That includes matches in Miami and 15 other cities in the United States, Mexico, and Canada. The expanding footprint further bolstering Miami's standing as a global soccer hub. So they are just building it out in a big way. It was turbocharged last year when Inter Miami CF signed superstar Lionel Messi, who led Argentina to victory in the 2022 tournament. So, man, everybody in finance seems to be moving there. Everybody in soccer seems to be moving there.
Yeah,
Climate change seems to be moving there.
FIFA already has about 350 people in Coral Gables so far, including the chief legal officer and his legal and compliance division. About 100 people are going to stay based in the U.S. after the tournament.
So kind of interesting, right? So they're not moving everybody out. What?
How about this World Cup in 2026 that's taking place in 3 different countries?
I love this.
U.S., Mexico, and Canada.
Remember we had the woman who, she used to be at Carnival.
Yes.
Right, and then she's very involved, and she's down in Miami and helping to build it out and stuff. So I think it's pretty cool. I mean, you have a lot of kids, a lot of interest here in terms of spectators in the United States who want to be,
you have your tickets
see
yet?
games. I have not.
You don't have your tickets yet?
No.
Yeah, neither do I.
Yeah, but listen, it sounds like you're going to have lots of opportunities. I mean, FIFA expecting $11 billion in revenues between 2023 to 2026 after expanded the 2026 World Cup to include 48 teams. So the build-out continues, and it's, not just overseas, but here in the United States.
Yeah, and here in the U.S., they now occupy 75,000 square feet of office space at the Alhambra Circle building, 396 Alhambra Circle, including the 15,000 square feet that they leased this year. People familiar with the transaction said the new space gave FIFA a 4th floor in addition to the 3 that it already had.
Kind of interesting, though. You see as things move out, you think about what economies become, how they evolve. I mean, Florida, obviously, a big tourist economy, but there's finance increasingly growing. But you look at things like soccer, and then that pulls in other spectators. But it's not just that area. It's also, like they say, there's going to be a lot of matches played throughout the United States.
You know what else is big in Florida?
Alligators?
Tennis.
Yeah.
We are headed to the U.S. Open.
We are. I am so psyched, man. I'm seeing all the U.S. Open cars moving people around in New York City. So
yeah,
I'm
seeing
really
a lot
psyched.
of people wearing the U.S. Open gear, walking through Midtown right now. Like the vibe, the U.S. Open vibe is in full swing.
It's like one big party. I mean, the food, things to drink, special cocktails, but just you walk around and there's just tennis everywhere. And you can see people warming up, playing matches. And we're going to be doing a couple broadcasts from there.
No honey deuces till after the broadcast.
Yeah, I've had my honey deuce. Have my little cup.
Yeah, until after the broadcast.
After the broadcast.
Yeah.
Aye, Captain. All right, coming up, everybody who's watching on TV, the close is coming your way. Tim and I continuing on radio, YouTube, and Bloomberg Originals with Bloomberg Business Week. This is Bloomberg Radio.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
It's all about the churn, everybody. Not about the burn, but the churn as we await for NVIDIA's earnings. That's not today. It's tomorrow after the close.
Yesterday, we talked about resting investing.
Oh, I like that.
Yeah, it's NVIDIA story. It was pretty cool.
Resting investing?
Yeah, it's something from the Silicon Valley HBO show, Rest Invest, when you kind of just chill until your stock vests.
I like that.
Yeah, the concern.
Is that what?
Some people, but you know what the reporting said in our story was that a lot of people are still working very, very hard.
At NVIDIA?
Yeah.
Yeah. I think it's going to be, very telling what that story said, what the results show tomorrow and the outlook when it comes to AI spending. So, all right. So we're waiting for that. But as for today, you've got stocks. I think we're at another record, right? On the S&P, right? We closed at a record yesterday.
Hey, you're the boss. I
don't know. All right. We're going to talk markets. We're also going to get into how betting is devouring sports. I don't know if you've seen the new issue of Bloomberg Business Week magazine, but it's all about sports and sports betting. So we're going to get into that in just a moment.
Plus, Ian Rogers is joining us. He's the Chief Experience Officer at Ledger on the next big digital leap.
This is cool.
Very cool. Yeah.
Looking forward to that. Also, not all things are equal. Just check out today's Bloomberg Big Take on the commercial real estate deep divides and their impact on city revivals, an important story and certainly a timely one in terms of what's going on.
All that and more over the next 2 hours. First up, though, a check on the day's trade and top business stories. Here's Amy Morris. Hey, Amy.
Hey, Tim. Eli Lilly selling those vials of its blockbuster weight loss drug Zepbound to patients for as little as $3.99 a month. It's working to overcome supply shortages of those wildly popular shots. Patients with a prescription for Zepbound can purchase a month's supply of the vials through Lilly's direct-to-consumer website. These vials are priced at about half of what the shots would cost. Bloomberg's Madison Muller explains.
For Lilly, this actually is expected to potentially be a positive to sales because they can sell more of the drug.
Bloomberg's Madison Muller, and the vials are only available through Lilly's direct-to-consumer platform, Lilly Direct, for patients who pay out of pocket. Shares of Eli Lilly right now little changed. Supermicro Computer shares dipped after Hindenburg Research said it's short the maker of server equipment. The stock fell as much as 8.7% after that report. It has now pared those losses down to about 3%. Hindenburg wrote that an investigation into the company revealed glaring accounting red flags, evidence of undisclosed related party transactions, sanctions and export control failures, and customer issues. And as you mentioned, investors are gearing up for big swings in NVIDIA's shares when it reports earnings tomorrow. We check markets for you all day long here at Bloomberg. It's all quiet. S&P 500 up 9 points, NASDAQ up 40, and the Dow now up 7 points. The 10-year Treasury yield at 3.8% and the 2-year yield at 3.9%. And that is a Bloomberg Business Flash. Now back to Bloomberg Business Week with Carol Masser and Tim Stenevec.
All right, good stuff. Amy, thank you so much. Really appreciate that update. Amy Moore is there. All right, so in the last hour, we really just mentioned the Kelsey brothers signing a big multi-million-dollar podcast deal with Amazon. There's a lot going on in the sports issue, including, if you check out the new issue of Bloomberg Business Week. Shameless plug, but there we go.
Okay. It's pretty awesome. It's a takeover, I think it's fair to say.
It's definitely a takeover, and it really gets into the new age of sports betting where it feels like it was like many years in coming, it feels like, and then it just took off in a big way.
Yeah, it's come on big time, where the state tax revenues are going, how it affects the play and sports media, some of the big players, FanDuel, DraftKings, versus a tiny little company.
Tiny little company.
Called ESPN.
Yes, indeed.
All that and more. It is a no-holds-barred look at how betting has devoured sports, which will be featured in the forthcoming issue of Business Week magazine. Check out all the stories now on the Bloomberg terminal and at bloomberg.com/businessweek.
All right, overseeing it all, Bloomberg Business Week, senior editor Brett Began. He's joining us in our Bloomberg Interactive Broker studio. Congratulations. Cool stuff as we all get ready for the U.S. Open. There's a lot going on, certainly in the New York Metro. Go back, though, how this deep dive came about and how you and the team thought about what you wanted to cover? I'm assuming sports came up generally, and then did you guys kind of like settle on this? How did it come about?
Yeah, this little thing called the upcoming NFL season.
Oh yeah, that too.
Small little thing that some people are interested in. It came about because for anyone who watches sports like myself, you now can't really watch sports without being completely inundated with ads for, as you mentioned, DraftKings, FanDuel, ESPN Bet, Bet360. I mean, we can go on and on, but essentially every other commercial now is related to a sports betting app, and we thought, let's take a look at this.
You guys have the numbers, too, to back this up. It's not just that you're, noticing more ads for this. I was pretty shocked to see this, Carol. Last year, Americans spent almost $120 billion on legal sports bets. It's a 28% increase from just a couple of years ago.
Yeah, that's a big bump.
Huge bump. I mean, that's basically, we can trace this back to 2018. So 2018, the Supreme Court said that there can be sports betting outside of the state of Nevada. We now have 38 states that have legalized it, plus Puerto Rico and the District of Columbia. So chances are you might live in a state where this is allowed, except it is not allowed in California, actually, at this point. But yeah, so it's become much easier for people to do this, as opposed to having to go to a casino, fly in a plane, go to a casino and do it. Now you pick up your phone.
I feel like there's a lot of different ways we can go, but I am curious about what the impact is on the states and the revenue that comes into them. And I'm also curious about what impact we're seeing on society. Before we dig a little bit deeper into some of the stories you covered, like, are we finding out that, yay, it's all great, or it's a little bit of a mixed bag?
It kind of depends on, it sort of depends on who you ask. I mean, the states wanted to legalize this because of the tax revenue that it brings in. What we found is that, a fairly small percentage of it is going to where you might want it to go, which is to help people who have problematic gambling patterns, right? A very small percentage of it goes there. A lot of it goes into state general funds, things of that nature. And in some instances, it goes to some odd things like aquaculture, or helping in very specific programs like helping to fight cancer in Michigan, things like that.
Okay, but it provides some extra revenue.
It does. It is extra revenue that's coming in. This is why the states wanted to legalize it. It's not always going in exactly where you might think it's going.
What about what it's done to the financial health of the folks in the states where it's legal?
Yeah, I mean, in terms of the states where it's legal, there was a recent report actually pointing out that this has led to delinquencies on credit, bad debt, all the things that you can imagine happening when you when you have access to spending all this money on your phone. Yeah.
Yeah, not so good. All right, so tell us about, I guess, well, we'll get ready for some studies in the future that will probably about the impact on society as a result. What?
Yeah, well, I don't know where you want to go. There's so many places we can go.
Well, so go through like some of the different stories and how you guys wanted to approach it.
Yeah, so one thing we wanted to do is definitely get the players' perspective in here. So we talked to some current NFL players and some former NFL players.
And they love it?
Well, it's interesting. I wasn't entirely sure what to expect, but in many ways they're split. They say on the one hand, it's great for the league, and it is great for the league, right? The league has partnerships with these apps. There's revenue sharing with the players involved in that. It's good for them. It keeps you engaged in the game longer. You could have a total blowout in the fourth quarter, but if your particular bet is riding on something that hasn't quite happened yet or been determined, you're going to still have eyeballs on the game. Eyeballs on the game means ad revenue, and that's good for the league.
Yeah, and one of the stories I remember reading that's in this issue, if a fan makes a prop bet, they're 20 times more likely to watch a sporting event. It's not just a prop bet, any bet. That's wild.
I get it, though,
For
right?
engagement, it's huge.
It is.
Yeah, because you're screaming. How many times how many changeovers are there going to be?
How many times will we see Taylor Swift? No, just kidding.
That's
a real
I know.
It's the greatest engagement tool that there is.
Okay, so let's talk a little bit about integrity here, because that's a big question that I know a lot of folks have, and that was a really interesting story by Devin Gordon in the issue. How are companies making sure that pro sports players are not involved in these prop bets?
Yeah, so one of the requirements is that they hire what's called a third-party monitor, and we have a story, as you mentioned by Devin Gordon, about a company called U.S. Integrity. That's one of the biggest ones. Essentially, they partner with the leagues to essentially have eyes on everything. They're always watching at all times. And they're keeping an eye out for anything during a game that might seem suspicious. And I learned so much about what can seem suspicious where you wouldn't think just with the, the untrained eye. But you could have a point guard, crossing center court who's sort of dribbling a lot without moving toward the basket. And they can look at that and say, well, is this guy trying to limit the amount of points that his team is scoring in order to hit the under on an over-under? U.S. Integrity essentially sends out signals to the leagues like, hey, something might be amiss.
Doesn't it feel like AI is the perfect sort of tool to do something like this?
It does, and yet it does require like a tremendous amount of touch to it as well, that maybe that hasn't come to AI at this point. Like in the Jonte Porter case, which we look at, yes, conceivably AI could have spotted the...
Because there was this weird correlation about, these bets that were taking place on a separate platform.
Well, if you were to go make a bet today, you probably would put your money on somebody like LeBron James, right? That's who people bet on.
Yeah, even I've heard of him, and I'm not big.
Right, you have heard of LeBron
kind of a sure
James.
Thing.
Yeah.
I'm sure, right? But to be placing a bet on a role player is that will immediately sound get a red flag that goes up. So that's what happened in that case, and they looked at it once in January and said, this is strange that all of the unders hit on all of the potential bets you could make on him. Let's keep an eye on this. And then again in March, when he did the same thing, then they said, okay, something is quite fishy here. They notified the NBA. The NBA did an investigation. They ultimately suspended him for life.
But, in order to spot that there's something maybe awry, if you will, is, I'm assuming, a sharing of data from either the odds makers and so on and so forth, who I'm sure don't want to share their information, right? So in order for this system to stay pure and have integrity, right, like people have to be able to make sure that they're seeing everything that's going on.
Right, and the odds makers are in this position where they basically have to turn over all of their information to a company like
Not
U.S.
a problem, right?
Integrity. Yeah, and we quote one who's like, oh, yeah, so, who do I have to turn this over to? Oh, there's only one company that I have to. Great, okay, so it is a bit of a, I wouldn't call it a monopoly, but yes, they're not like thrilled about it, but they also realize that they kind of have to do it, and ultimately it does help them. They want a window into this as well.
Yeah, exactly. I mean, I do wonder, is someone, or is the takeaway that because it's just increasingly there's more and more money? I mean, throw in college athletes who can now use name, image, likeness, which I think is a good thing in different ways. But I just feel like the money just keeps growing in collegiate sports, professional sports. Like at some point, not that money ever corrupts, but
never.
At some point, are we going to potentially see something really bad?
Well, I mean, I'd say probably yes.
Yeah.
I mean, we're already starting to see harassment of athletes, right, pretty directly for, let's say, costing you on an over-under bet.
Yeah.
But I think you raise college, which is a whole different universe and a whole nother ball of problems for everyone, basically, because the prop bets, which are very, very difficult to police, are even harder to police in college. If you think about it, if you're an athlete in college, you're living with, eating with, going to class with other people, and they could notice, hey, I noticed you have an ankle brace on today. Does that mean you're not playing tonight? Well, if an athlete were to say, yeah, I'm probably not going to, well, that person might say, well, I'm going to bet the under on your points tonight. It's so easy for information to seep out, and they're frankly terrified of it and of this happening.
Well, you raise a question that, at least I'm asking this question, why is it allowed in college athletics?
Well, that's a really good question because there's a lot of money to be made, basically. I mean, there are different states that have different rules around some of this stuff. Like there are certain states where you can't bet on an in-state team.
There's a lot of money to be made unless you're a player.
There is a lot of money to be made unless you're a player. Although, interestingly, when we were talking to the NFL players, they're getting revenue sharing from the deals at the higher end.
Yeah.
But some of them have actually said, hey, if somebody's betting $10 on me to do something, shouldn't I get $1 of that? Shouldn't I be getting a percentage of that? And I wonder if that's not going to come up in a future CBA.
It's unbelievable. Just a lot of money. Where do you want to go next?
wherever you would like to go.
I want to talk. I want to talk a little bit about the platforms that are dominant right
Sure.
now. DraftKings and FanDuel over the last few
Don't
years.
forget ESPN.
Well, they're trying,
Yeah.
and that's the thing, and that's what's so interesting because that's a Disney-owned company, and it's the most magical place on earth.
Right.
And I know it was such a big deal. In the last 18 months or so, when Disney owned ESPN got into this, because, okay, it's not necessarily part of Disney's identity. We can talk about that part. But FanDuel and DraftKings were supposed to merge years ago and become the same company. That didn't end up happening. What does the landscape look like for these platforms?
Yeah, so we call it a duopoly in print. You've got FanDuel and DraftKings that run about 75% of this market. Really, they got first mover advantage. I mean, they were huge into fantasy sports, and so they basically had their name made by doing fantasy sports. And then when sports betting became legalized, they started doing sports betting. So they're really like front and center. They're what most people use. It's funny. One of the reasons that most people wind up using them is because they see other people posting wins online. They say, oh, well, where did this guy win? Oh, FanDuel, DraftKings. Okay, well, that's the one that I should be on. They also just tend to offer like the most number of bets. If you're looking for over-unders, like for instance in the Stanley Cup last year, on one particular bet or night, they I think had 8, and some of the other sites had 3. So if you want to make 8 over-under bets versus 3, they're really going to be the place to do it. They also offer a lot of customization. So they offer customized parlays at a rate that other sites don't. And essentially, they're like in many ways the Kleenex of of this industry. They're just sort of the name brand that everybody knows.
Does that mean Disney isn't committed to getting more of this business?
No, they are. I mean, and Disney would argue, like, look, our ESPN partnership with Penn Entertainment is only a year old. Like, let us cook here. Give us a chance. They're at about 2.8% right now. According to them, they're where they expected to be at this point. But it is very hard to gain market share on these larger companies.
Hey, where do you want to go?
Pushback.
Go ahead.
The idea that maybe some might think this is not so good for the industry.
Well, if you're talking about the sports gambling industry, it's great for them.
Right. Not so good for sports.
They're literally all in.
Right. Not so good for sports.
Yeah, I mean, this is more
in society. There are folks out there who say this is not good for society.
And I think they would have a very strong argument that betting can get out of control, and that some of the ways in which you'd want to rein that in are not as funded in a robust manner. But the leagues basically have all made the decision since Adam Silver's op-ed in the New York Times saying that it should be legalized, essentially to say, okay, we're in. The leagues don't want their product being monetized by someone else and then not getting a cut of that, right? So there's no turning back at this point. That's just not going to happen.
Well, and what's interesting is another story that how it's impacting also sports writing, the media side of it, right? It's just interesting how it's infiltrated. The tentacles have been felt in so many different aspects.
There is a whole ecosystem surrounding this right now. If you turn on ESPN during the day, there's a betting show. Their betting experts are on other shows. The ticker at the bottom of any ESPN show is going to have ESPN bets in it. So it's inescapable.
I always think about like athletes of decades ago or something being like, what? Like,
yeah.
Like we crossed.
I'm not a betting man, Carol.
You are not a betting man.
Let's just say that.
Well done, well done. Incredible. Brett Began, thank you so much. Unbelievable deep dive in the new issue of Bloomberg Business Week. Brett, of course, is Bloomberg Business Week's senior editor. Be sure to check it out online on the Bloomberg and also on newsstands.
3:21 on Wall Street. I'm Amy Morris. Stocks are mixed. Not a lot of movement right now. Traders still waiting for the big market moving event of the week. It's not till tomorrow afternoon when NVIDIA reports earnings. The AI chip giant is the second most valuable company on the S&P 500, and that valuation could mean some big swings for the market. NVIDIA shares are 1.6% higher at this hour. We do check markets for you all day long at Bloomberg. Like I said, not a lot of movement. The S&P 500 up 8 points. NASDAQ up 33 points. The Dow is down now 5 points. The 10-year Treasury yield at 3.83% and the 2-year yield at 3.9%. And the merger between entertainment giant Paramount and media company Skydance is set to go ahead after Edgar Bronfman Jr. withdrew his competing offer. Bronfman is executive chairman of streaming service Fubo and told Paramount Special Committee of Directors he would not proceed with the bid. Paramount agreed last month to a merger deal with Skydance. So shares of Paramount now 6.3% lower. That's a Bloomberg Business Flash. Now back to Bloomberg Business Week with Carol Masser and Tim Stenovet.
Amy, thanks so much for that. Well, our next guest has been at the forefront of the transition from analog to digital, particularly when it comes to music. Here's a little bit of his background. So more than 30 years ago, he was the founder and webmaster, when that was a thing, of BeastieBoys.com. He was then at the company behind Winamp, which was the first way that and I think many people who are over the age of 40 now, listen to music on their computers.
Yes.
Eventually, he became CEO of Beats Music about a year and a half before it was sold to Apple for $3 billion. After a stint at Apple, he found himself as chief digital officer at LVMH, the $374 billion market cap parent of Louis Vuitton, Dior, Sephora, Hennessy, and more. Now, Ian Rogers is chief experience officer at Ledger. It's based in Paris. They're a digital asset security company. He joins us here in the Bloomberg Interactive Brokers studio. Ian, how are you?
I'm great, thank you. Thank you for that amazing intro.
Well, it's good to see you. I did skip a few years in there, but I did include it because I'm wondering if you see any parallels over your career digitizing music to what you think is happening when it comes to digitizing real-world assets.
I think so many. I think that's the right way to think about it. I think the internet was fundamentally a revolution of information, right? Information used to be, okay, how many magazines can you rack at the Hallmark store, and how many channels are there on the FM dial, and how many channels on television? And that expanded over time. We got satellite, and we got VHS, et cetera. But the internet was just like, anyone could register a domain and start, yahoo.com, and who knows what happens when you do. And I think what we have now is a revolution of value. And I think that will have an impact that's at least as big on humanity as the internet has had. Obviously value is important in our lives, and I think it will be that far-reaching as well. I remember in the 90s, there was sort of like, this is going to change everything, or this is going to change nothing. It really depended on which side of the fence you were on. And in the end, it touched everything, right? And many of the business ideas which were laughed at in 1999, are things like Instacart today, right? Because in 1999, we had all of the ideas.
Right, Webvan didn't work in 99, but Instacart worked today.
It works today. And I think there's also one of the things I learned from that is it sort of takes 15 years for these things to germinate, right? I remember, playing with trying to get content in my living room, in the late 90s. Because I'm a geek and I, chipped an Xbox and was trying to download movies off the internet and watch them in my living room. Fast forward to 15 years later when my mom calls me and says, oh, I canceled cable and I only have Roku. And that's just how long it takes from the idea to it really reaching mainstream. So to me, that's the lesson. And I think similarly, many of these ideas that were like, this is going to change everything in 2021 in kind of this Web3 boom, I think if we fast forward to 2036, they'll be right there. They'll be more mainstream.
Before we talk a little bit more about 2036, so is it not only the ideas catching on, but the technology catching up to make it really easy to do?
And the user experience, right? I mean, today you can say, hey Siri, play the Beatles.
Right.
And, Paul McCartney and John Lennon come out of your phone, right? But I remember in the 90s, it was, when I started at Winamp, I started there because I was recording sound files from the soundboard at Beastie Boys concerts and then uploading them as this new thing called MP3s, but you had to be really specific. You had to start with, okay, you have to buy a sound card for your computer, and then you download this program called Winamp, and it was incredibly hard to use. I remember the days personally when you didn't say, like, go to my website. You said, there's this thing called the internet, and if you get a computer and a modem and an ISP and a web browser, you can download an ugly page very slowly, right? And so I can understand why people would say, who wants that, right? So there's a long walk, though, from there to what we have in our pockets today. And I think that's the same thing in this revolution of value that people have a hard time seeing. Like, look, I paid to come over here on the metro or on the subway, you call it here in New York, with my credit card, right? That's a very inefficient tool for micropayments. Credit cards were not meant for micropayments. I don't actually need credit. What I need is digital cash settlement that's very cheap.
Right.
That's not what the Visa network provides.
Okay, so enter what you're working on at Ledger right now, because I think a lot of people who have heard of it, and correct me if I'm wrong, but 6 million of these devices are actually out there. 7 million now out there in the wild. I think a lot of people think about it as a wallet for your cryptocurrency. But a lot of people not many people actually use cryptocurrency to transact. They see it as a store of value. But you see it as something much bigger than just storing your digital money.
Yeah, what Ledger fundamentally is a way to protect your secrets, right? So we know that our phones and our computers are very bad at protecting secrets. It's not what they were designed for.